Hey everybody, hi Amy. Is everyone else experiencing that rhythmic is not up yet this morning? Usually they are by now, but I have 3 different connections to them and none of them are working. Anybody else running into that? It's not atypical. I'd be curious if anyone has a rhythmic connection that's actually running right now. I think they're doing some sort of extra maintenance, but mine are all coming back as not connectable. Hey, everybody, come on in. I opened the room early, so we have plenty of time. There's a really good chance we get limit locked here on the reopen, so I figured we might as well have time to talk beforehand. You have Rhythmic connected? Is it a paid Rhythmic connection or a SIM through one of the combines, Morris? Paid, okay. Let me try my paid ones because that didn't work a second ago, but I've got a few. Oh, yeah, no, not the Europe server. I'm talking about Chicago. Yeah, the Europe server would be up by now. That's normal. But let me see. I'm looking at my paid connections. Yeah, it just came up. I'm up now too. Yeah, I figured that was just them trying to get some maintenance done. So anyway, we're up and running here. So that's good. Somebody's not muted. Yeah, it also depends on which connections you have. There's a few different levels of rhythmic service, as many of you know. And so, yeah, depending on who the broker is and what you're paying for, you can get a lot of different servers. And of course, the SIM servers, which they do put really good resources against, but not nearly the resources that they give you on any of the paid ones. And like I said, there are differences among the paid ones I've seen, depending on who your broker is and what you're paying for. All right. Anyway, we're not going to start here. Well, there's nothing to do till 2 officially, and I want people to be able to get here. So the room's open. Post questions if you have them. If anything interesting is going on here, I'll mention it. Otherwise, we will start in about 10 minutes. Excuse me. I got to tell you, there's only a few of you here, but I got to say this. I'm going to keep saying this all day today and tomorrow morning. This is absolutely unprecedented, what's going on right now, and the impact it'll have on the markets. I have traded through all the big crashes except 1929 because I wasn't born yet, but 87, 9/11, 99, 97, and pick them. 2008, 2010, every single one. There's absolutely nothing like this has ever happened before. Yeah, as far as the thing, Amy, I think the disconnect at the moment for a lot of people on the unprecedentedness is just frame of reference. If you're 20, you don't have a lot of frame of reference. If you're 40, you have a certain amount of frame of reference. If you're 60 or 80, obviously it's different. And also, if you have a more direct connection, and mine specifically is, my parents both came from New York City, and both of their parents were immigrants around 1900 from Eastern Europe. So, so they're both basically depressed. They were both 30, both of my parents. So they're basically both depression babies. And my mother's family was comfortably upper middle class. Her father was a diamond and fur merchant in Manhattan. And my father's dad was a traveling salesman. He sold cereal for one of the packaged goods companies, literally, driving from town to town. And so their perspectives were just very different. Again, after my father passed away from lung cancer 10 years ago-ish, my mother's developed a relationship with another man who was quite a bit older. And his father was a successful businessman in 1930 when the crash happened, and was also born into money. And at the height of the Depression, the same man sold fruit from a cart. in Brooklyn, literally. Go to the fruit market, get a bunch of different fruits, put them on a cart, bring them back to the neighborhood, and maybe mark them up a little bit. A guy that was born into money. So just staggering unprecedentedness, because all of that, that we saw in 1929 and whatnot, this could actually be more significant because the economies are just so much more sophisticated. We don't have an agrarian economy, for example. Yeah, there's people here. It's fascinating. You guys probably saw what I posted. Here, let me get my main screen back up. You guys probably saw what I posted. I posted it on the Top Step group, and I think I also stuck in my group without the picture on. Oh, there goes the disappearing toolbar again. Hang on, there it is. Okay, let me stop that share and put up this one so you guys can see what I'm talking about. Anyway, I threw this up in Top Step and in mine, but this right here. I keep seeing people posting about trends, and it's just mind-boggling to me. And invariably, these are people that have traded for 3 or 4 or 8 years, or whatever. And anybody with any sort of experience that, again, has just a little more context to it, these conditions, there's just no such thing. Even in good conditions, trends are dubious. But anyway, you make a good point, Amy. There's just so many people that have just never seen this. All they've seen is markets that buy the dip. And it's going to be a rude awakening, because this is not a simple market either. This isn't just short the indexes with ETFs. That's not going to work either. The bounces have been crazy. So anyway, who thinks there's a trend in this market? Oh, I see it all over Twitter and all over the Furu community. They're all talking about 2 trends a day, and have we broken the downtrend? Really? Yeah, Morris. In a lot of ways, common sense is a better experience to have. The problem is when you get into the markets, common sense can often get colored by emotions, and that's really the skill of this. Of doing this as an art, is really understanding the opportunities without coloring them with emotion. Yeah, good old Kramer. He's half Furu and half. He ran a pretty decent fund in the late 90s, but he was also cheating because he would front run his own trades that he would announce on CNBC, and he's permanently barred from trading for life for that. So everything he talks about, he can't actually do any of that. He has a blind trust that trades stuff that he can't see. But he's he was notorious for throwing monitors out of windows in the 90s. So yeah. Anyway. Okay, well, let's see. We got about 5 more minutes, but this is open Q&A anyway. So, but if you have questions that are directly related to bootcamp stuff, I will wait till we actually start at 2 for those. But feel free to post them in the questions. Oh, my mom's sort of oblivious, and she's in an assisted living place now that for memory care that's totally locked down. They're not allowing any visitors whatsoever. So, we can do like FaceTime, that kind of stuff, but my mom doesn't really get that anymore. She has Alzheimer's, for those of you who don't know, and I was taking care of her personally until recently. And now she's in a memory care facility, and it's at the point where, yeah, you know what, that's exactly what I said to my sister, Amy, that, she doesn't really know what's going on. She just knows there's, ice cream at 3 o'clock and it's good. And that's fine with me. So. I do agree. So somebody mentioned to me, it was Barr mentioned, I don't know if he's here yet. No, he's not. Anyway, that there was a possible error on one of the fast charts with where it was painting the the first hour high and low, and I see what he was talking about. It's the video. It looks like it might be wrong on one of the plots. So I reached out to PJ, who wrote that indicator. Some of you are using it, some of you aren't, to see if he could double check how that's working. I have noticed issues with that are just NinjaTrader quirks. And so, don't worry too much about that if that's happening to you. If we see it again tomorrow, I will pay close attention to it real time. There's a problem with all Ninja indicators on Ninja 8 painting properly. Sometimes you have to just change the number of days. Like, on my 5-minute chart, this one here, I'll sometimes like it won't paint the first hour high and low or the opening 5 minutes. Like on this day here, it didn't. And sometimes you can fix that really simply just by, here it's getting 7 days, change that to 9 or something. It doesn't even have to be necessarily up or down, just different. And this is a quirk I've seen in a lot of Ninja indicators in Ninja 8. I'm not quite sure what it's about, but it might be affecting the PJ opening range 60 and opening range 5 as well. So I am looking into that if that's something you noticed, or if you're one of the people that brought that to my attention. I am aware of it and I am looking at it. The thing about charts and indicators and platforms, and you'll hear, if you listen to the workshop videos, you've heard this before, but if you're new, you haven't. So I'll say it again. People really want to marry their indicators and their platforms, the toolbox. And I really advise against that. By marry, I mean, you get really used to one set of tools and it's the only one you know how to use. And you don't want to ever use anything different. And that's dangerous because these guys often go out of business, as Market Delta did, or something better comes along. So it's a much better exercise to learn what's underneath. What are you trying to see on a certain type of chart or dome or whatever? What information is it that you want as a trader? And then, go find the best tool at any given moment for that. And that's not a common philosophy among retail, people, but among professional full-time traders, it's overwhelmingly how it works. I mean, Lee and I are always, for example, running 2 or 3 platforms at a time. And we have personal preferences, but you have to be agnostic about that. You really do. Okay, here we go again with the people showing up on video. I don't know why that happens, but let's see. 1 second. We're going to start in just a minute. I've just been babbling, guys, while we waited for people to roll in. And where did the toolbar go? There it is again. Okay, I have to figure out how to turn those video peepers off. Let's see. Video settings. Enable video, my video. Okay. Whoops. Okay. Sorry, guys. Just give me a second. I'm going through settings. Okay. I think that's right. I'm also trying to see if there's a way, something in the settings that might allow me to fix that cursor issue that we've talked about before. Yeah, no, none of these are going to affect that. Okay. Yeah, except I don't have a camera. Okay, let's see. Purposely don't have a camera. All right. What is this asking me? Oh, Bar, I see you're here now. I mentioned, I don't know if you were here when I did, but a minute ago I just mentioned about the first hour high-low thing, and I reached out to PJ about that, and I'm sure he'll get back to me. He's a pretty intensely focused coder guy in the UK, though, so he's on different times. And right now, if you check your handy world time reference in the UK, it's later than here. 9 o'clock. So I don't know. I think he lives on a boat, so he could be gone for a while. But anyway, I will get an answer on that, and I'm also going to look for it in the session in the morning to see if I see any errors with that. A lot of times that just has to do with the way the ticks are getting sent by Ninja. I mentioned that a little bit ago. Okay. Is Lee here? No. Okay, I didn't think he'd join us. All right, so it's 2 o'clock, guys. Welcome. This is Open Office Hours Q&A for the boot camp, the way that works is basically you can ask whatever you want. It mostly should pertain to the boot camp, but since everybody in the boot camp also is a member of TRG, either through the free month we're giving you with the boot camp or because you already were. So, you know, I pretty much will take questions on anything during these open Q&As. So it's pretty much anything goes. You know, that's not an exaggeration. So anyway, if you have questions, stick them in the chat and we will address them. And if not, I have a few things I can talk about as well while we're waiting for questions. But I'd like to hear what you guys have. One of the things that we were talking about before some of you came in is just how completely unprecedented what's going on in the markets and the economy is. And, you know, I gave a little background about my experience and my family's experience, you know, through the Depression and whatnot. And, you know, and mine as a guy with an economics degree and a trader since, you know, 73, this is really unprecedented, unusual ground we are approaching here. So any of you, if you come from the, you know, you've only been trading for a few years and, you know, the buy the dips of the last, you know, 10 years or so, if that's where you, if that's your sole experience in the markets, you're in for a really interesting ride, but you have to really get away from thinking that way. You know, the buy the dips kind of mentality, or that there's any sort of trends. That's how this whole conversation started. I was commenting on a post that I put up in the Top Step group and also in surfing about just, you know, I keep hearing rookies, this is it right here, you know, I keep hearing rookie traders posting about trends and, you know, who are you kidding? There's no trends in a market like this. You know, it's just purely price discovery. That's all we are seeing. Okay, so nobody has questions, but there's a lot of people here. Let's see. All right, here we go. We have one from Joe. Please discuss IB versus 30-minute clearing range. Why do you prefer 60? Okay, Joe, you're new, and that is a great question. And it's actually pertinent to both the open 5 setup as well as the open 60 or the first hour high low. And the answer is actually relatively simple once you get the hang of kind of my worldview and market view, and Lee's is very similar. I don't think he's going to be here today, but if you're looking at initial balance kind of thinking, you also have to understand that I'm looking at it purely opportunistically from a point of view of edges. I don't care what intervals are normal or typical or whatnot. What I do is I look for edges, and then when I think I've got one, I test it statistically, and not back testing it. I test it with trades, and that's been the way I've approached trading my whole life. And I got good at that in my 20s, right after that $150,000 down day. That'll do it. And I just started realizing that so much quote unquote conventional wisdom was wrong. And so the idea behind 30 minutes is just simply that's the first period on a TPO chart. So, you know, if you're familiar with the market profile, it breaks the market up into 30-minute segments. Guess what? You know, traders don't work in 30-minute segments. It just was statistically simple to do that for Stettlemaier back when he did market profile. Now, if you go back and analyze the specific intervals of time against real trades, what you find is that there's really 3 times that are important. Number 1 is the opening 5 minutes, is absolutely the most important one. It's often very hard to trade, but it's the most important one because it's the first time since we closed the previous day that we have an idea what anybody with any sort of large accounts are thinking. You know, and forget smart money and big traders and all of that bullshit you hear on Furu channel. The bottom line is just when massive amounts of money come into the market and they don't agree on price, price moves. You know, that's the only way price actually moves, is when people don't agree on price and one side's more aggressive than the other. That's it, right? So if you look at the open 5, what you're seeing is the immediate energy of that overnight that couldn't be traded, because many funds and traders and ETFs and whatnot literally are either not allowed to trade overnight, or they're just too big, and if they did, they would be the market. So that's the justification behind the open 5. Now, once that happens, Then it becomes kind of settle down and let's see, and that's where the statistical periods of market profile, specifically the 30-minute chunks, get um, more useful. And so what I did was I've tested all of the different chunks. I used to use 15 minutes. I've used a half an hour. I've used the hour. The two that are valuable and useful and provide an edge in these conditions are 5 minutes and 1 hour. Now, you can break the 1 hour into two pieces if you like, and sometimes that can be useful, particularly if there's any sort of news event at the end of the first hour, as there many times is, economic release or whatever. So I hope that answered your question. I don't prefer anything. I go with whatever the edge is. And the Open 5A trade, I have literally over 100,000 examples of that live in my database that I've done. And I've also tested against the old pit opens, you know, like, well, wait a minute, for oil, the pits actually open at 6. So is 6:30 correct? You know, it should be half an hour earlier. I tested that and there was a slight edge at 6 o'clock, but most days it works better at 6:30 if you, even if you use the 6 o'clock edge in oil. So again, it's all about taking your thesis to the data, not the other way around, and letting the data prove it. You know, too many people want something to work and then they force fit it. So I hope that answered your question. David, what can you use statistics like what was discussed? Be more specific, David. Which statistics in QuantLab? You know, there's a whole lot of data around first hour highs and lows and opening ranges. I mean, literally, there are databases all over the internet containing all kinds of twists on that data. So you need to be more specific. Thanks, Joe. And, you know, it seems really commonsensical when I answer these, you know, but I realize coming from a lot of the conventional wisdom that it isn't common sense. You know, most people are thinking the other way around just because that's overwhelmingly what you hear. I'm going to move this back to ES as opposed to the micro for the reopen here. Don't type and drive, and don't even listen to me and drive, David. You'll be a 20-year-old inspirational corpse in the cemetery. Do this when you get home. Okay, let's see. From Morris, let me go back here. Darren, what's your opinion about using a trailing $1,000 drawdown for step order under these conditions? Yeah, you know what? The only way I would be doing combines right now, if you use the 50 as a reference, I'm doing one in Earn2 and it's going really well. I've had no losing days. I'm averaging 150 bucks a day, trading one lots, 3 trades a day. And I haven't devoted 100% of my time to it. So I could do better than that. So if you're doing 150K, you know, given the kind of top step parameters, Darren, I'd be probably trading, you know, maybe 1s and 2s, you know, 1s normally. And then, you know, if I get a real ace king setup, maybe I'd trade a 2 lot. And I might be using, you know, $300 as my daily drawdowns. Because there's so many great HMOMO opportunities, Darren, that risking money in the crappy setups is just daft. Why bother? You know, when you get a good HMOMO setup, just keep jumping in with 1 lots and taking 50s. You know, you can fly through those $3,000 or you know, $9,000 targets pretty quickly. But I wouldn't try to do it in one trading month. I think all of the combines in Top Step, if you try to do it in a month, you're just designing to fail. You have to put it over 2 or 3 months minimum, particularly the way they do step 2. So that's my opinion on that. Morris, halfway through your docs workshop, can you say, oh, great, okay, cool. Can you say that in order to learn your advised way to trade, that the charts and domes one would need are the ones you, I'm not sure I'm following your question, but I think I get it. Morris, are you saying that mine isn't an advised way to trade. I know that's just an English translation issue, but I'm just showing you a way that works for me, and I've been able to teach it to other people. You know, but rather than putting your own spin on it first, I encourage you just to learn it this way, and you know, then you can take it off to your own spin. But let's see. Let me read your question again. You don't need any charts at all, in my opinion, to trade these kinds of markets. I think you can do the dome exclusively as long as you have a really good sense of context personally. You know, if you're one of those people that is really good with spatial relations tests, you know, you can like look at a box unfolded and fold it in your brain. If you're good at that, then I think you don't need a chart at all. However, if you came from charts, I think, this panel over here on the left that I have, this group of views, I think that's really a handy way to do it. Because you get, kind of a gaming at every level. And, understand that I change this interval here sometimes to be a little faster or slower for these two. But, this one gives me real good context, and that's all I need to make any decision, whether it's scalping or intraday. So did that answer your question? That's the one. Yeah. Okay. So could you do it without those? Yeah, I do it all the time. Once I've seen those, I really don't need to see them anymore because, I understand where they are on the dome. However, and this is a really important however, Morris, as I was demonstrating in the session Thursday and Friday, getting used to the movement on the dome versus what you're used to seeing on a chart, you really have to practice that because the domes just seem like, particularly in NQ, it looks like they're just moving so fast. And, if you do like I was doing in the session, obviously the market's not open now, but on my main screen here, this chart over here would have data on it. And, that at least gives me a way to kind of frame what's going on. And even though the NQ might be looking like it's really going crazy, it's really not moving all that much. Or maybe it is, So, but certainly coming from any kind of chart background, I would strongly recommend that approach, yes. And the idea is really simple. Those three views are not about, they're about one thing. They're about context. And for me, by definition, or my definition of context is the following. I want to know whether we're in ebb and flow or we're in price discovery or we're in high momentum. And sometimes that's hard to tell, particularly ebb and flow can be hard to see on the dome if you're not used to it. And charts make it really clear. Here's the ES one from Friday, and ebb and flow is really a clear kind of a pattern. It's what chart traders mistakenly might or incorrectly call going sideways, and that's not at all what's happening. If you keep an eye on these little volumes as we swing back and forth, it's telling you a very, very specific story, and the story is not sideways. So whenever I see that, I just cringe because markets there is no sideways. Anyway, so yeah, I think that's a good place to start. Okay, other questions. Let's see. From Joseph. So for ZB and CL, statistically, the 930. Okay, so here's what I did, Joseph. I've done no data with ZB. But from what I understand, what I'm about to say is truer of equities and oil than it is of the bonds, the notes, and whatnot. And that's because a lot of pit traders used to warm up on those before they traded the equities. So I'm gonna say that I don't know. And this is a sign of somebody that's a good instructor. I don't know at all about ZB. I honestly don't. And I could test it for you, except I don't trade it. So I'd encourage you there to do your own homework or ask the group. Maybe some of them have done it. I think a few of them have. I know a few have with the DAX where it worked the same way and a few other indexes around the world. Having said that, I know for a fact that oil ignores the pit open now. And it's about just when everybody's ready to trade big money at 6:30/9:30 Eastern. So I hope that answers your question. So for oil, yeah. And that one I did test. I don't know if you were here when I said that, but I've tested oil's 6 o'clock versus 6:30 opening, the old pit open. And there is some energy there, but it's much easier to trade. Your gaming will work better once you let the equities open up a half an hour later. And the reason for that, particularly lately, seems to be that there's just so much correlation between a lot of the S&P stocks and oil. And with the crash recently in oil prices, that's even more true. So that's a statistical and a intermarket justification that I would want to prove true, and I did, but it makes complete sense that it would work that way. And again, with the bonds, I honestly don't know, but I know a lot of old school traders that warm up on those, or they did, back in the pit days. Marty is a good example. Marty, what's Marty's last name? Somebody help me out. the old pit book from the 80s, Marty, whatever he said. Whatever, oh shit, I'll Google it. This is one of the problems with teaching and talking at the same time and being my age. Pit boss, was that what it was? Pit, Marty Marno, traders. Anybody remember who I'm looking for here real quick? Oh, come on, Marty. Where is he? There he is. Pitbull. That's the book we're looking for, not Pit Boss, Pitbull. Okay, there we go. Okay. This is who I'm talking about. Martin Buzzy Schwartz. This is one of the old-time floor traders. This is a great book, by the way. It's a real quick, simple read, and you'll just love it. It'll make you love trading even more if you haven't. Anyway, he talks about that. And so I would suspect that's probably true still, but I don't know for a fact. Okay. I don't use any tools on TOS anymore because TOS consolidates the tape, which makes them useless. Bar. So yeah, monkey bars, if you're looking for levels, they're useful, but levels are useless right now. So the only thing I use in TOS are those equivolume charts that I show you guys sometimes. And that's just because I've got some indicators on there. I'm bringing it up right now. I've got a couple of indicators on there that I used, a decade ago, or actually even longer than that. Whoops. And I find them useful just to see the intermarket relationships, but I don't use any of those tools. Okay, let's see. Hang on one second here, guys. Let's see. We don't want that. We want to look at this. So this is the one I was talking about. There's nothing up here right now because I normally have it on the same day, but this set of charts. And again, it's just about seeing a comparison of the 6 of them side by side. One's oil, one's gold, and then the 4 indexes. That's the only thing I trust TOS for. The data is just no good. So that's the short answer, Bar. Okay. Yep. Okay, Morris, let's see. Monkey bars, we covered that. Okay, Alex asked me, have you ever thought about going for bigger targets? Okay, you clearly don't understand how I trade. I do not go for any targets. I stay in the market to take money out of the market. I only go in when I have an extraordinarily good edge. That's how I have a 90% scalping rate. But it is not uncommon for a scalp to become a huge winner. But I never, ever assume that's going to happen. Every single trade is a scalp. But the minute you start thinking, well, I should have, I left too much on the table, FURU bullshit, or, I have to use my target, more FURU bullshit. You stay in a trade until the thing, listen carefully, Alex, this is very, very important. You stay in the trade until the thing you entered the trade for no longer exists. Now, let's say I have a trade that I enter that is a range breakout. Okay, so here is a really simple example of that. We're not trading, so I can't really make it work, but I'll fake it. Okay, let's say I was trading, let's see. Okay, let's say it was this time right here, and I can't push the chart that far over because I only have 1 day of data, but let's say it was right here. So it was 11:21 on Friday, okay? And I entered the opening range low, or the first hour low retest, which failed short. So I'm short at 23.60, and maybe I did it with, I don't know, 4 or 5 full-size contracts. Everything's a scalp until it proved otherwise, okay? This trade would work immediately. It would start dropping. I would be profitable. As soon as this bounce right here started, I would have gotten flat because the thing I entered the trade for is no longer true, okay? Now, if you kind of zoom in on that a little bit, I probably would have jumped right back in when I saw it turn back down. Now, that's not very efficient, but that keeps me from getting hosed by being on the wrong side of it. And that would have worked, again, because I'm fading the first hour low, and that premise still holds. But the premise of the trade is only the reason I took it. Remember, once I've taken the trade, the premise is no longer relevant when I'm in it. What's relevant? What is relevant is managing the loss or profit of that trade. Okay, so I will take a profit, and if it looks like I can get more, I'm not going to hang out necessarily just for that. I'm going to hang out based on the risk of losing what I've got, which is the exact opposite of the way you're thinking. Do you understand that? It's very much like defensive driving. Let me put it another way. I have raced professionally motorcycles and cars. And defensive driving has a completely different meaning in that world, Amy, because everybody is licensed to go fast. We know each other's skill levels, and there's no cross traffic. So then it becomes a game of skill against the other skill. So defensive takes on a completely different meaning when you're racing against another professional. But in the market, you have no idea who you're against. The only way you can measure at any given second your execution is based on whether you're making money or not. So again, in a scenario where you're seeing this kind of movement, you can't just say, well, I should enter short there and hold on because, you know, so far it's holding the low. No, you can't do that because you got too much vertical movement here. What you could do here is scale in and out. And that's what you hear me saying over and over. You know, I might go in with 4, might take 2 off, maybe put 2 more back on. Yeah, that gives you a little more room. But as a one lot trader, you cannot do that. So that would have to be either a tactic for micros for most of you, or it would just be you'd have to go in and out. Sitting in a trade, waiting for it to work or waiting for it to work better is one of the 2 or 3 stupidest things you can do as a trader. And a lot of people talk, I have to work on my patience. No, you have to work on better entries. If you've got in your journal anywhere that you need to work on patience, that's incorrect. There's no such thing as being impatient in trades. It's being wrong in trades. You know, be clear, be honest with yourself. If you're in something and it's not working, your entry was wrong. It's that simple. You know, this nonsense about waiting for trades to work is nothing more than that. By the same token, if you're in a trade and it's profitable, you treat it like a scalp unless it proves otherwise. And the only thing you're concerned with is protecting those profits. You know, getting more of them is not even on your radar. It will happen organically if your skills are good. I hope that makes sense, Alex, because it's such a different way of thinking from all the nonsense that you get taught out there. But I got to tell you, this is the right way to approach it, at least in my, you know, experience from the last few days. Do I ever use trailing stops? Sure, I do them all the time. If you look at any of the samples that I've traded live, but I don't do them the way, again, you're taught to do them, because that will never work. Where, well, every time it moves 10 ticks, my stop will automatically move 5 ticks. If you use that kind of mechanics, what will happen is you'll get taken out at exactly the spot where you should probably add to your trade, okay? Because it's too good a spot. So that's the problem with any mechanical trade management. And I'm gonna, when we talk about drills and when we do some more live things, I'm gonna give more examples of trade management. But the idea of mechanical trailing stops that self-adjust as the market goes one direction or the other, with the only exception of being trending markets, which are extraordinarily rare, less than 15% of the days are trend days. With the exception of those days and some overnights, you know, where you can throw on a trailing stop, you know, and go to bed and, you know, you got nothing to lose because you're already so profitable. With the exception of those 2 scenarios, I think the only way to trade futures is with yourself staring at your screen and managing your trade. It's just much too complicated to try to do it any other way. You know what, John? That's true. And you know what? You should connect with Brent, you know, who spent the first week he was here deleting indicators that he'd been buying all over the place. That's a very common reaction, John. It totally is. I mean, you know, you've been fed bullshit from some good bullshit feeders for a long time. And you know, the point isn't that an exponential moving average doesn't show you something about the market. The point is that that's useless information unless you know how to develop it into a trading edge. And that's why it's so distracting. So by all means, step one is getting all that crap off your charts and your computers. Not to mention it'll run so much faster without all that shit. So yeah, that's short. Yeah, see, look, Brent, here. He and I had this exact same conversation that I'm having with you guys, John. Every time we get, 10 or 15 new people in, it's the same thing. And it's one of the reasons Amy is working on a newbie manual, the 2-page introduction to what goes on here, because a lot of people say, we're going to put like, look, these 5 things are likely to happen. You're going to try to ask for steps and setups over and over again. Well, wait a minute. I don't understand the first hour high and low setup. What's step 1? There are no steps. And everybody goes through this when they first get here. And it's just, we lose a few of them because they just refuse to learn. And that's fine. And most people, spend a couple of weeks banging their head on the desk, and then they realize they have to unlearn, and then they start learning. And from there forward, gosh, there's so many examples. I'm just looking down to see who's here. Anita's here. She's an example of that. Brent's here. He's an example. Darren's an example. David's an example. Ferv's an example. You, John, now. Let's see. Maria, everybody, it's like 75% of us. Okay, it's a very, very, yeah, there's another one. So there you go. Okay, so what other questions do we have here? Let's see. Okay, Alex, this is a great question. The biggest problem is when a trade moves a bit around your entry before finally going in your direction. Okay, let's talk about that. The first problem with that, and I totally hear what you're saying. The first problem with that is because you're thinking in terms of prices, not price ranges. So you will enter thinking that the perfect magic number was whatever, pick something. I don't know, here, let's grab a chart for let's use the NQ for this example. Why not? Okay, so you'll say, okay, look, the perfect example to be short is, let's do 70.84. Let's say it comes down from here and then it goes up and it's weak again, and you say, okay, I'm gonna get short right in here. The problem with thinking in terms of price points is that it's easy to get spooked out when there's events like this. And that's exactly how algorithms work. They look for behavior that is typical, and it's very, very easy to code algorithms that do this kind of stuff. And I don't do it because I don't have the account tools to do it, but I know people that do this, and it's really profitable. All you're doing is shaking little guys out of their trades and accumulating positions, and then the direction more or less will continue. But if you're looking strictly in terms of single price points, you'll always get spooked out. So you have 1 or 2 solutions to this problem, Alex. Number 1 is if you can afford it, you have to look at a trade from a point of view of scaling in and out. Now, even in the ES right now, with even just 1 or 2, that's a fairly big ticket account. So in the micros, and again, go back to the videos we've done on the micros, and I'm going to try to do some more of those at the reopen today or in the morning, depending on what the conditions are. In the micros, you can put 5 on, and you're really not risking very much. So that's what I suggest you do to just kind of learn how to do that. You'll get a much better feel over time for where your entry should be and where they shouldn't. It's really, 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 really hard in these current market conditions, particularly in something like the NQ, but even recently in the ES, to pick a good entry and not have any kind of drawdown against you. And if you watch some of the more recent videos, and you'll see when I'm doing examples where I scale in, and you'll see me, or where I'm doing 1 tick drills, and we're looking for a $12 tick profit, right? And you'll see it go against me by 6 or 8 or 9 ticks, and I'll stay with it, and it will ultimately profit 1 tick, and that will make no sense to you. But again, it's about that thing, I'm watching the action, and as long as the action to me is the same as when I entered, I won't bail on a trade like that because I'm confident enough in my own skills. But until you get to that point, that can be very expensive. So do that, learn to do that in the micros. Now, part 2 of that with respect to the micros is what we were talking about with David, the Slack. And I'd encourage you all to read this because I don't remember exactly where it was, but it was in Anything Goes chat over the, I don't know, David, if you can remember where it was, please point it out. But anyway, I was talking about arbitrage and ARBs, and I can search our whole Slack here for it, but I'd really rather not do that right now. So anyway, if you look for that conversation, it refers to the micros and arbitrage, and Lee jumped in, and that's a really good explanation if you want to understand how the micros work. You've got to give trades like that room. There is no magic, 8-tick stop, 2-tick profit kind of scenarios or ATMs or anything like that that's going to work. I promise you, you'll just get stopped out enough times that you won't be profitable, and it just won't work. But if you do it with discretion, once you learn how to do it, you'll be profitable. And that seems counterintuitive, but it's not. Again, it's just because there are so many expert systems out there that are constantly moving the price around, designed to just take you out of your trade, and you have to learn how to read that. You really do. Okay, I'm scrolling back a little bit to see if I missed any questions, and then I will go to the ones at the bottom. I see a few came in there. We're going to talk, I see a few on drills. We're going to talk a lot about drills in the morning, and that will be open for the whole TRG, not just the boot camp. So if you don't know about that already, I opened up another session and I made it earlier. So tomorrow morning, the drill session, it's this one right here. In fact, I'm going to pin it. So that is now tomorrow morning at 4:30 my time, and I will take that up until 5:30. Then we're going to end it, and then we'll start the normal Ides of Monday. And there could be some exceptions to this if we're lock limited, but I'll post them in the Slack if that happens. Okay, so let's see. Yeah, one other thing I want to say about what you asked me, Alec, is that you said you have the fear of losing your small profit. The answer to that is you should be taking your small profit, and that way you'll get good at seeing bigger profits. So that was just one other thing I wanted to put on the end of answering your question. Yeah, Brett, you made a really good point. I mentioned, I know one guy who I coach he's not in TRG, but this guy is a kid who's a professional gamer, and he's never used a chart. He doesn't know how to read a chart. He's never he barely graduated from high school with the GED, but he's an awesome gamer, and he's got I have very fast reactions, but I'm also 60, and his reactions are faster than mine were when I was his age, and that's really unusual. I have reasonably fast for the population reactions. I know that because they were tested when I was a sprinter at UCLA. And if you look up the science, some people have faster, what are called fast nerve fibers versus slow nerve fibers. The way to test which you are is stick your hand under hot water. If you feel pressure first, you're like me and you have fast fibers. If you feel heat first, you have slow fibers. And the people with fast fibers typically have very, very quick reactions. And are sprinters or, that kind of thing if they're in any kind of athletics. So that can maybe help you, determine your trading style too. Go with what you are is really important. All right, let's see. I see some other good questions here. Yeah, trading, Amy said, it's the way trading around a core position. That's one of my favorite things to do. And in this market, I've been doing it a lot in the micros because, you can work into a 5-lot, micro and you're not risking any real serious money. And you don't need a lot of margin to do it. And, so you may not make as much money, but I've posted the results in Slack. You could easily be making a few $100 a week with a $1,000 account if you get skilled at that. So, remember 2 things about this that I will say over and over again, add to the list of things I say over and over again. The reason any of you should be in the market is to remove money from the market. Anything else is daft. You're not there to be right. You're not there to show your friends your cool charts. You're not there to, oh, wow, my indicator's working really well today. And all that's bullshit. The only reason you're there is to take money from the market and put it into your bank account. And the only way you can do that is by having an edge and managing risk. And that's all that matters, literally. Nothing else matters. So, you know, if you're thinking anywhere else, like, you know, the example I'm going to pick on Alex a little bit, but he's being a good sport. You know, well, yeah, I've got a profit, but I feel like I'm leaving some on the table. Nonsense, a profit, stick it in your pocket and move on. And as you get better, you know, maybe those will get bigger. And, you know, that's improving your skill. I remember when I was racing motorcycles, if you're familiar with motocross at all, motocross is basically professional crashing. I've said this before, and I have the broken spinal areas, 9 of them, and many, many other places to prove it. And basically, if you're going to be really good at motocross, the way it works is, you know, everybody starts at the same spot, and there's a race to the first turn, okay? If a certain amount of the riders crash between the start and the first turn, by the rules, they will restart the race. So what happens is that anybody who's really skilled, if they don't get a fast start, they will just fall purposely and take everyone else down so that we can start over. And this happens every single day. So basically, you know, even if you're the best guy there and you get the great start and then you slow down to go into the turn, the guy that got the crappy start behind you will just center punch you in the turn and crash everyone else. And that happens. So you learn very, very quickly that that it's not about, you know, getting out to the front. It's about staying on your bike and staying close enough to the front to capture that at the very end. And trading's like that too. You know, if you get into a trade and it immediately goes against you, you know, that's just like when you're in a motocross race and the start goes off and you crash and 5 guys run you over. You know, it's the world's way of telling you that you shouldn't have done whatever you did, you know, and you learn. And there were even certain people I would learn to stay away from because I just knew the kind of games they played. And that's very much like the algorithms that I see today. You know, if there's one type of rider that was particularly aggressive in a certain way, you know, that I would learn to avoid him, not because he was better, but because he could screw up my game plan. Okay. And so that's a really important point in trading too. You know, you might get everything right, but the trade could still go wrong. So get out of it and start over. Or you could get it right, but it's not moving yet, but it's doing what you think it's going to do. And the range you're buying is holding and it pulls back a little bit and you see people coming in on your side. And by all means, that's an opportunity to add to that trade because again, the premise still holds. You know, and in my motorcycle example, you know, there were times I would forfeit the idea of trying to get the lead, knowing that if I could get behind the guy in the lead, I would be in much better shape to handle all the crap that goes on between, you know, it's 45-minute moto. You know, the motocross, you typically race 2 or 3 45-minute heats. They're called motos. And it's the total combined score. So you can even screw one up totally and still win the event. So it's really becomes, defensive is almost the wrong word. It becomes about protecting your gains, and the market's the same way. So anyway, that's one example. There's a really good one. A friend of mine who races kind of baby Formula One told me once, I'll tell you about. He raced in some of those races that go for like 24 hours and all kinds of weather and whatnot. And had some really interesting feedback about that too. And there's a good movie about that too with, what's his name in it? The one about Carroll Shelby. So anyway, let's see. But you know what? So much of this is about just understanding yourself and understanding your own biases. So what you're saying here, Alex, the biggest problem when a trade moves a bit around your entry before finally going in your direction and you tend to close it early. Again, you need to take yourself out of the chop of it and the, you know, whether it's profitable or not, and think about, you know, why you bought it and is the order flow still consistent, and make sure you're not, you know, looking for, understand what confirmation bias is. Gosh, I should get this document. Hold on a second, guys. There's a really good document I posted in Surfing. Gosh, a long time ago though, but let me see if I can find it so I can share it with you guys. Whoops. Not bias with a W, bias with a bias. Okay, it was a chart of all different kinds of biases, and I think this might be it. Oh, that's, you know what, search bias in Surfing the Markets, and there's a bunch of good posts about it, but somewhere in here, wait a minute, this might be it. I think this is it. Yeah, this is it. Okay, this is a graphic about all these different kinds of biases. And it's really important to understand, you know, as a human, we're not nearly as smart as we think we are. And understanding just, our natural way of thinking can be really, really handy for being a good trader. So anyway, I'm posting this in Masters, and I encourage you all to download it and print it and read it, because it's just so important. And it goes to the question you're asking me, Alex. So give me 2 seconds for this to upload, and then I can enlarge it and we can talk to it. So, okay, so this is a really good example of some of the things we're talking about here. And the one I would encourage you to avoid is confirmation bias. And that one's right over here. When you think something's happening, you've got to really understand whether it is or is not. A lot of times when people ask me this question, I tend to close it too early. It finally goes my way, but then I want to profit so badly, so I take it. A lot of times that trade wasn't so good in the first place, and there was a lot of different biases landing in there. So I'm going to leave that as the last answer to your question. Okay, thank you, David. I see that everyone can check out what I was talking about with him and micros and arbitrage. Good point, Amy, and that is also a good idea. Ford versus Ferrari, yes, that is the movie. Excellent movie. Okay, so good stuff, everybody, real good stuff. So if some of you, there are a few of you older folks in here too. All right, so I've got another car racing story for you. If you're close to my age, and you'd have to be my age or older, I think, because I started doing this when I was young. I was 14 when I started. How many of you know what bracket drag racing is? Probably nobody. Okay, well, anyway, another thing I did was called bracket drag racing. And what that is basically, it's really kind of fun. You can't really do it anymore because the cars are too smart. But basically the idea was you would take your car and you would put up kind of, it's like your handicap. You'd say, okay, my car, in my case, it was a Firebird 400 HO, 1968. And that car could consistently run, with track tires, slicks, maybe, depending on what fuel I was running, maybe 13-second quarter miles, something like that. 13, 14, those were typical. So what you would do in a bracket race is you would go to the race and you would say, okay, I have a 1968 Firebird Formula 400 HO, and it can do a quarter-mile drag race and consistently in 14 seconds. And so they say, okay, thank you, and they register you at 14 seconds. And then somebody else comes in and he's got a top fueler, like when you see a movie of drag racing, where they flip over and flames come out of the back and all that. And those will run a quarter mile in 6 seconds. So that guy will come in and he will dial in at 6 seconds. And this is where it gets fun. Then a guy will show up with a Volkswagen that's souped up, a VW Beetle, and it might do a quarter mile in 18 seconds. So he'll dial in at 18. And the way it works is you can run against anything, but you have to go at the speed you dialed into or slower. If you go faster than you said you could go, then you cheated. So think about it. You might have a race where you have a Volkswagen that can go a quarter mile in 18 seconds running against that top fueler who can do it in 5 seconds. So what happens is the Volkswagen leaves 13 seconds earlier from the starting line. And he might be 50 feet from the finish line when that top fueler gets to go. And it's based on the red light, green light. So it's totally, absolutely 100% not about the other guy. And this is the point I'm making. Whether that guy in the top fuel dragster can run 5 seconds or not, I can't care less, nor do I. I have to make sure that I hit exactly 14 seconds and not a tenth faster. And if I go slower, he's likely to beat me because he's likely to be close to his dial in. So that's called bracket racing. And it was a really fun thing to do back when, cars couldn't run a quarter mile in a computerized session without you driving, like a Tesla can do now, because it was all about knowing your skill and knowing what you could do at your absolute best. And so you were constantly racing up against your best. So with trading, it's the same way. Your best gets better as you get a more sophisticated race car, as you run fuel that burns hotter. You go from maybe gasoline to running nitromethane, which is nitroglycerin and alcohol, and that makes you go much faster, but it also blows up every now and then.
so you can get killed. You know, there's always a trade-off. Risk management in trades is the same way, Alex. You have to look at it and just say, okay, you know, under these conditions, a tick is wonderful. You know, every time I do a 1-tick drill, if I'm paying $4, which I'm not, but let's just say I am, I pay less than that, then literally, you know, you're sticking $8 in your pocket. You're picking up $8 bills. And if you think about that, and if you look at some of the results I posted, Amy's posted, but you know, not just among us, this is why people do drills like the 1-tick drill. You'd be stunned how fast that adds up. I posted for you guys the other day. You know, I've been doing this in my micro account, and it's up like $500 in 2 weeks. And I think the biggest winner there was like $50. And for a micro, that's a pretty big winner. But so I just really encourage you to step into that arena and just think outside the box. You know, think like you're racing, or think like you're drag racing, or think like you're playing poker or whatever, but just stop trying to think that this is some sort of predictable mathematical game, because it's not. In its purest sense, it's really trader against trader. But because you can't really know the other intentions of the traders, it's very much like poker. In all you can do is make very good educated bets, not risk all of your money on any one hand. And if you're consistently good, then over time, you're going to be at a lot of final tables, like, you know, using a poker example again. I mean, it's the same. If you watch the World Series of Poker, it's the same 10, 15, 20 people at every finals. That's not luck. It's because they're good at managing risk. You know, they're extraordinary poker players, but at the World Series of Poker, there's 10,000 extraordinary poker players. What makes those other guys better is that they manage risk better. You know, to quote Kenny Loggins, or Kenny Rogers, who just passed away, they know when to hold them and they know when to fold them. So Alex, it's really important not to get into that mentality of, I closed it too early. Question 1, was the trade profitable? Yes or no? Yes. Question 2, there is none. You did fine. You had a profitable trade. Next. It's that simple. Okay, let's see. So Darren, what type of trade took me the longest to master? Oh, by far, scalping on the dome. Because I got stuck in all the same problems you guys did. I tried to scalp the dome for 18 months using fixed stops. And I tested every level of fixed stops, from 3 ticks to 12 ticks, doing the 1-tick draw. And I'll tell you what, Darren, none of them work. Absolutely none of them work. The only way that works is to use discretion. And, you know, I just couldn't believe that was true. I kept posting it in Pete's chat room. And this is like in 2016 in the Jigsaw chat room. I kept posting all my results on Excel spreadsheets and saying, okay, well, you know, if you do this many, you know, if this many losers, then you have to do this, you know, and everybody was trying to do the same thing. And then finally I just said, you know what, guys, this doesn't work. You know, you got to just manage it with discretion. And, you know, there's still people trying to make that work to this day in that same chat room. And that's like 3 years later. So it doesn't work. Okay, other questions? Oh, 68 Dodge Dart. Yeah, there was all kinds of good Dodge motors. One of my buddies raced Olds, not that. Let's see, he had an Olds 442. The other one had the Dodge Dart Swinger, and I'm blocking on what motor was in that. I didn't know the Dodge motors that well. I was a GM and Ford guy, so. Oh yeah, 411 rear end, 411 posi. That was what was in my Firebird. And the problem with fixed stops, and thank you, Morris, and thank you for joining us. I do know it's late there, and I appreciate you coming to the live session. So have a good evening. Stay safe, stay healthy. Yeah, you know what, Darren, that's a really good question. And I've struggled with why it is that it screws you up. And you know what, you've seen me over and over and over in live sessions when I'll put a trade on with a bracket with my HMOMO brackets, which are way off the trade, you know, 10 ticks or more, 20 ticks. And the first thing I do, if it's volatile, is what? I say, okay, I'm going to move that stop out of the way. And that's exactly what I'm doing, what you just said. It's distracting for me to see that there. If I want to get out, I have a very simple way. It's called the flat button right there. I'm circling around it. And the stop is, that's the catastrophe. That's if my computer crashes, they'll take me out of the trade. But, a mechanical stop, yeah, it's not only distracting and it affects your blink. That's a really good way of putting it. But for me, it's just like, I don't want to think that way. I want to look at the action and I want to look at whether I'm right or wrong. And the second there's even a notion in my brain, and you guys have seen me do this too, I will even be in the middle of explaining to you, and this happened last week. I will be early in the week, I think it was Tuesday. I was in the middle of explaining to you the range setup while I had on 3 or 4, and I said, no, that's not working, and I immediately hit flat. That's what happens in my brain. There's like a gray line, and when it crosses that, I automatically do 2 things. I hit flat and cancel, because in case there's an order that was straggling that wasn't connected to my OCO. So that clears everything out. And also because Jigsaw does a nice job of displaying whether you're in a position or not, so I can usually tell. But that it's funny because one of the services that I subscribed to about 10 years ago, which was a trading group, one of these, what we would now call a Furu group, except the guy running the group was a really fairly experienced trader, and I know him fairly well, so I know his biases, and which anybody talking always has their own, including me. But anyway, one of the times I was watching him trade, I noticed that, and I said, what's the deal with that? And he said, you know what? I got that from one of the guys at my firm. He's a prop trader. And yeah, it's not that I'm getting far away, Amy. Amy just told me that my mic is going far away and in and out. Now, that's actually, there's some stuff going on here that I'm trying to keep out of you guys hearing. So I apologize. That's going on in the background. I'm literally just moving my mic toward my mouth and not. So you should still be able to hear me. It just might go up and down in volume a bit, and it might be a little scraggly. We have some infrastructure problems here where I live, and right now Cox is fiddling with the system, and they're telling us it's not going to go down. So I apologize if it's not totally clear, but doing my best with that. I am aware of it, but thanks for pointing it out. Okay, so anyway, going back to that. So we were talking about that, and I said, what is that? And he said, I got that from one of the prop traders at my firm. And it's just, you got to learn to listen to it. And so about, let's see, about a year, 2014, I went to Chicago for an event up at Top Step, and Linda Rasky was there, and I was talking to her about her experience, which is fascinating. Everything comes out of her mouth is fascinating. She's great. And so, we were talking about various things, and I said, I saw you post on Twitter about, when you think a trade's not working. And she said, oh, and with that same energy she always has. She's like, oh, and she just totally cut me off. And she said, oh, when trade's not working, people are always trying to think how to get out of it and lose less, and just get out of the damn thing. And she giggled, and it was just so true. People spend so much time trying to figure out how to, exit from a position that's not working. And, it's very simple, flat. And so that I think is also a good learned experience. Okay. Oh, there's some great questions here. So, okay, let's go back. So I'm going to take these in order. Yes. So Anita's asking me discretion. Take all trades as they go. Yes. Every single trade that I do is discretion. And remember, again, guys, stop here for a second, okay? Really important. Remember the sequence of the thinking here. I throw this up periodically, and a lot of you probably don't pay attention to it. This is in the group. It's under the master stuff, okay? Understand this is the way both Lee and I do trading, and very few people think this way. So I'm going to really emphasize this, okay? First, look at the instrument and understand the context. Item number 2 here is just about the balance between scalping and kind of swing trading, and I just assume that you understand that. That's a given. And about the quality of setups, which is number 3. Those are all really givens. But understand here, we are getting the setup from the market and not vice versa. So if I go into a setup and say, okay, I'm doing 1 tick drills, then I will never care if I could have got 2 ticks or 4 ticks. What I might do is switch my tactics and say, okay, I'm going to switch to HMOMO because I can get more than 1 ticks out of this. But I decided that before I started trading the setup, not as a criteria of the setup once I'm doing it. This is a critical distinction. Do you guys get that? It's really, really important. It's not mathematical. You're absolutely correct, Anita. It's discretionary because it's based on the way the tape and the dome is moving and the energy in one direction or the other, or the lack of it. And also, are we in ebb and flow, or are we in price discovery, or are we in H momentum? They're all different. You know, if we're in H momo, high momentum, the only thing you've got to do is get the trade on and get your stop between you and the trade, and then you can literally trail. I've trailed 1,000-point winners that way. In oil, it happens actually fairly frequently because oil moves at such huge amounts, but not uncommon in the NQ either. Right? You know, the NQ has moved 200-300 points in a day. You know, do the math. A 1 lot could turn into an enormous winner if you do that. But you cannot think in terms of what I can win and what I can lose. You have to think from the point of view of, I can afford to lose nothing. So it's when you have high momentum, the risk is too high. So all you want to do is get the trade on in the direction of the momentum, and then you want to stop between you and your entry. And then you can do whatever you want after that. You know, what I recommend is discretionarily trailing it. And you've seen me do that in countless examples. But if there's any sort of pullback in a situation like that, I immediately get flat, and then I reconsider the entire scenario all over again. It's not like, oh, wow, we have high momentum, I need to re-enter. No. I come out and I go back to this document and I say, okay, reset brain. You know, is it still high momentum? Is that still what I'm seeing? And not in terms of the setup burned into my brain. I'm not at step 3, I'm back at step 1. What's going on here? And is there a logical place I can get a stop in? So the ones that matter are 1 and 4 here. That's really the key. So I really can't emphasize that point enough. It's if you get profitable entries, the trades will always take care of themselves. And think about it, if I'm profitable as I am, like 87% of the time, then it really doesn't matter if I get 1 tick or 3 ticks or 6 ticks or 9 ticks, because it's going to add up over time. And as long as there's only infrequent losers, like in my case 13%, and the losers are always little, you know, no more than a few ticks, or worst case, you know, I get washed out on a sweep for 8 or 9 ticks once, you know, out of 100 maybe. That's typical for me. So that works really, really well. And so that's the way you have to look at it. If you think you're going to fix that equation by using larger targets, you're fooling yourself, because all you're doing by doing that is putting on more risk. That's what you're doing. You only are at risk when you have a position in the market. If I can go into the market and it immediately goes my way and I can get out with 2 or 3 ticks, you know, $30 and pay a $4 commission, my God, I'll do that all day, happily. And I'll scale up from 1 lots in the ES to 10 lots. And, you know, I'll put $300 a trade in the bank. You have to think that way. I just cannot emphasize it enough. And here's the reopen, and we're off. Okay, so I'm just going to let it settle down, and I'll look at other kinds of questions here while I'm doing that. Yeah, will she be one of the guest speakers? No, I don't know Linda that well. I would love her to be a guest speaker, but I seriously doubt we'd ever get her. We'll try. How much are we more likely to hold a trade longer, from John Miller, if the context is HMOMO versus ebb and flow? The answer is simple. I will hold it as long as it's working. If it's an ebb and flow entry, it's likely to become a breakout if I got lucky and got caught on a good side of a trade. And by the way, I will never jump in right at the reopen on Sunday. It's just way too crazy. So, you know, it's really not a good idea to take a position right now. You have to let it settle a little bit. You know, this is price discovery right now here, and you know, look at it. It's just, even if you're right, you know, it's moving around, what, you know, two points at a time. Yeah. So you just can't manage risk. We'll let that settle down for a while, And while we're doing that, I'm going to answer some more questions. So, all right, so this was a really good one about that I was just answering about the setup. And so John, first of all, my setups kind of fall into two different categories, and right now they're all scalps. I'm really not looking for a lot of intraday swings, but if it's ebb and flow, you know, which is what consolidation feels like, and it's somewhere around, you know, the low or the high, frequently you'll get into that as kind of a breakout of ebb and flow, and you'll get lucky because you're reading the order flow, and you'll get a intraday swing trade where you'll like short the high of the day, or you'll buy the low of the day. So often you get luckier on ebb and flow. On the other hand, HMOMO is the immediate reward setup. You know, you get in and, you know, you'll get long and you'll get like 9 ticks immediately in the ES and you'll think you're a genius. And if it's truly HMOMO, sometimes you can do that, you know, 10, 20 times in a row. So I hate to say this because I say this a lot, John Miller, but it depends. But it really does. And, you know, I think I gave you a complete answer as to under what conditions. But as you learn more about the different setups, and I'm working on my setup, republishing my playbook. I will be doing that as soon as the boot camp ends. I think that'll make a little more sense. So, all right, let's see. I'm reading more questions. How much does she charge? Yeah. Right now, David, Linda's doing a workshop like what I did with you guys in the fall. It's just 2 weeks long, and she only does about an hour a week, and some of the 2 weeks, and some of her folks are doing some of the other sessions. And I believe that's $1,000 those 2 weeks. So you know, so she's making about 100 grand by hosting that 2-week session. So no, it's not like we could just pay her fee. On the other hand, you know, I have some mutual friends, and I'm not a friend of hers. I've met her, but you know, it's better to go to an event or to. She has a lot of really good material on the web just from her. There's thousands of recordings of Linda, and she's just really candid and fun. So you know, she's always interesting to listen to. Plus, she comes from the same background many of you do, you know, having been a technical trader, and she's not a dome trader, but she can be very, very short term. She has, you know, a very fast scalping indicator, her 3.5 thing or 3.7, I forget which it is, which is, oh, look at that right there. We're limit down. Hello. That's what it looks like. See right there, it's just right there. There's a million guys, and it's just sitting there trading right there. So, well, that was quick. Didn't really give us much time to play. Well, the guys that are long are screwed. That's why you never want to just jump early into trying to trade a Sunday, because they could get trapped here. In any event, I wouldn't try to trade this if I were you guys. Make sure my accounts are all turned off. Wow, that was fast. We're limit down across the board. You can see, so this is what limit down looks like. You know, I hear people saying, you know, where should I know we're going to be limit down? Well, you can't miss it. On a footprint, it just does that, you know. Anybody who wants to buy here can, but, you know, they'd be really stupid too, but the people obviously doing it, probably covering shorts, or, you know, there's a little arbitrage going on. But anyway, yeah. There's 9K, you know, anybody will be happy to sell to you here, right? Why is that? Because on limit down, the odds that we're going to gap even further down when we are huge. Almost, you know, it's almost a given that that's going to happen. So, you know, that'll go on all night, David. They'll be happy to give them to you. But, you know, if you got stuck long here, my God, I mean, on a one lot, you could easily lose $5,000, you know, way beyond whatever's in your account. You know, read the John Grady email if you don't understand the math of that. Okay, the president's talking. We don't have a president, Joe. But I'll stay out of politics as much as I can. But the just level of bullshit that's coming out of this administration is just mind-boggling. What kind of person can take a 10K at a level? No, those are what you would normally think of as market makers. You know, there really aren't any in this space. But number one, there are certain firms that guarantee that they'll provide liquidity and some of those guys. It's not Rothschild. You know, that's common internet furu bullshit. You know, George Soros isn't a big scary meanie, and the Rothschilds aren't running some secret world order, and that stuff is all bullshit, people. That's just designed to give you a big bad meanie in the sky to point to when things are bad. Sure, there's a lot of very rich people and they can influence politics and whatnot. But, you know, any of you that think there's like grand conspiracies, rich people aren't organized like that and they don't like each other enough to do that. So, you know, it's just complete nonsense. George Soros is a Holocaust survivor who runs a very successful fund, and he operates in his own self-interest, and he's very philanthropical. And anything beyond that is complete bullshit. And that holds for all of those guys. On either side, it's all bullshit. Okay. Yeah, Jay Powell. You know what? One thing, Raj, very good point, Raj. One thing that most rookies and retail people do not understand is that the Fed has absolutely the right to buy and sell ES futures and any other futures in the market if they want to. Their mandate is very wide. They can enter any markets and conduct any operations they want. So be very clear here that there are cases where the Fed will in fact be the buyer of futures, and they can. They're rarely the buyer of last resort, though. You know, but I did see them in 2008 backstopping the futures markets on numerous occasions. And you know, it's just, you can't. There's no way to even game what that will mean. You know, right now this is just so unprecedented, as we were talking about before the session actually got started in earnest. You know, this could make the 1930s look like a cakewalk. There's so many structural issues going on here, besides anything to do with death rates and any of the stuff on the virus. I mean, just from an economic point of view, this is completely uncharted territory. So it gives new meaning to the term uncharted territory. And if anyone in this room doesn't understand that, then please speak up and I'll try to explain it to you. This is going to impact the world in ways we have literally just never seen. This is not going to blow over in 2 weeks. It's not going to go away in the spring. There's not going to be only 15 cases like Trump, you know, bullshitting. This is bad. It's going to get worse before it gets better. And the economy just is not designed for this. So, you know, there'll be plenty of food and there'll be stuff in the supply channels, but they're going to reorganize themselves. You know, you could very easily see Amazon, Costco, and Walmart being the only guys left. There's a million ways this could play out. None of us know because there's just no way to know. There's too many variables. And so all you can do is just guess what? All you can do is improvise, adapt, overcome. I say that all the time in the markets, but it's true in life too. There's just no way to know how this is going to go other than from an economics point of view. The world has never seen a problem like this. This will be unprecedented. I just don't see any way how that is not true. Yeah, the problem, Raj, with oil, and yeah, you guys are oil producers up there too, is that once oil falls below certain prices, there's a dozen countries around the world that are going to be instantly unstable. Nigeria, Venezuela, all of the African oil producers, the Middle East oil producers, half of them are they can't buy their populace off if they don't have oil revenues. So you're going to see wars, and you're going to see border conflicts, and you're going to see puppet dictators popping up, and you're going to see leaders overthrown. You know, this is going to be messy. It just is. I don't see any way it's any other way. I really don't. I think the travel industry's gone, Andre. I think it's over. I don't see how the shipping or the cruise lines, which suck anyway. I can't imagine why anyone takes a cruise, but that's my opinion. But airlines, you know, and I don't think the United States is going to bail all the airlines out, and I don't think we can afford to. This is a structural thing, and you know, it could change life as we know it for a couple of years easily. So, you know. Where can you go to learn more about it? David, that's a tough one because there's so much, political crap. And, what I could give you a list of economics books and history books from college and that I've read in the last couple of years, but it's just not like that. There's no way to go and read about it. But if you read good sources, avoid the major news channels. By all means, avoid Fox, which is nonsense. And, read the good independent papers and, some of the Brookings Institute, the center non-political economic organizations is where I get information. But I'm also well read enough to know when I'm reading nonsense and bullshit, which, you get from all the major outlets, but this, the mainstream media are all full of crap. That's also nonsense. The only real mainstream media that's full of crap is the one we all know. So, which is really just propaganda at this point. That was pretty clear from the virus response. But, that doesn't mean other channels aren't leaning one way or the other. Again, it's about your biases and learning to do your own homework. Dunning-Kruger effect. People in many cases are too stupid to know what they don't know. And they don't even know where to look because they look for information that agrees with them. And I do the opposite. So, David, that's probably the best answer I can give you. I'm working my way to it. Look for things that disagree with your point of view, and that's the best way to learn. And the more point of views you can find, the better. Let's see. Amy makes a great point. One of the problems with chaotic events in the world is that they create a lot of chaos. And guess what? Chaos creates opportunity. Any entrepreneur knows that. Now, you don't want to be the asshole that's hoarding, toilet paper and selling it on eBay. That's not appropriate entrepreneurialism, but there's plenty of things you can do to help people. Even as simple as working for Instacart right now. Instacart is saving the lives of some of my elderly sick neighbors. And, I'm trying to help them where I can too, but so services will adapt. Uber, as we know, it's probably going to go away for a while. And, I've told you guys, I was an Uber driver in the college town around here for the last few years. Loved it. It was a blast. Great way to get away from trading, meet a bunch of smart people from all parts of the world. I can't imagine. I got the flu 2 years ago in the winter Ubering from a passenger, and I know exactly when it happened. And I just can't imagine, those people not driving with people sick. On the other hand, I personally know like two couples, and they're both Uber drivers, and they depend on that to eat. And I don't know what those guys are going to do. So yeah, this is unprecedented. Wow, you're in Cancun, Andre? I did not know that. Wow. A friend of mine, Andre, has a beach rental in Cancun, scuba equipment and surfboards and stuff like that. And he made a very, very difficult decision, but he could afford to. He closed up and he paid his employees for 3 months. And he shut down. He just didn't think he could take the chance because people were still showing up at the resorts, and he was afraid his employees were going to get sick, and they still had to come to work. And as you know, it's a really small place around there. So I totally feel for you. Yeah, Maria, that's another good one. I saw one of my friends posted that you can get from LA to San Diego now in like, an hour and 15 minutes. And, I remember doing that in college, but it hasn't worked in 25 years. There's no traffic. And so one of my friends is trying to get some sort of temporary permits and whatnot to run shuttle services from one end to the other, and he already has a limo license. Obviously, they're shut down now because of the stay-at-home order, and he's about 3/4 of the way through getting the LA County and San Diego County to approve that on a case-by-case basis. So there's a really good example. All right, there's some other questions here in the chat that I missed, so I'm going to go back. So with respect to trades, yeah, somebody asked me, I do not trade without a stop. I just only have a catastrophe stop. I just want to clarify that. Okay, let's see, some other questions here. Okay, Martin says, Martin, you are so misguided. $30, $4 commission, that's 13% of the house. Oh, wait a minute. Okay, were you arguing that was a good deal for us? Okay, I thought you were saying that that's a crappy deal because the commission's too high. Okay, Martin, if I misunderstood you, I apologize. If the commission was 15 of the $30, who cares? Again, incrementally, every trade makes sense. But yeah, it is a great deal. I think, and the house, of course, makes money, but that's one reason the micros are kind of fun. And if I read it the right way the first time, you were saying that wasn't a good deal, then tell me that that's what you meant, because I need to argue with you. So. Okay, let's see, what else do we have here? I'm looking at other questions. And yes, that is me actually physically banging into my microphone that time. I have a small animal that would like to be on the desk, and I'm discouraging it from joining me right now, and that's why that's happening. Okay, so David, I think all the rich people who put orders in for planes from Cessna are going to pull them. It doesn't work like that either. It's like the ARB discussion. First of all, David, most people that have private jets do not own them. They lease them or timeshare them. I have done that in the past, so I'm quite familiar with it. But owning one is not very economical unless you are in a certain category that travels a great deal and da-da-da-da. Well, this is a fun story. While I was Uber driving, many of you might know, I live in Montecito, and one of the residents of Montecito is Oprah. And Oprah has a G5, Gulfstream 5, which she keeps here in Santa Barbara, and she lives here. And she has two crews. A Gulfstream 5 requires two pilots all the time. And she actually has two sets of two pilots because she travels internationally frequently. And when you do that, you can only use one set of pilots at the time. One of them has to be resting. So anyway, one time I went to the pickup at the airport, and lo and behold, the two guys that I picked up were one of her crews, the captain and the co-pilot. And really fun conversation. Drove them down to her place, and then so we go in her main gate, and the property's like 50 acres, and the house is way back. We go in the main gate, which is like a whole house by itself because the security guys have their own apartments. And then we go like a little ways, and that's the pilots have their own house on her property. So anyway, that's a different, that's the mega billionaire category. That's not just rich people. That's, so far beyond 1%. It's a fraction of 1%. But the normal rich people that live around here do timeshares and they do net jets and stuff like that. They don't actually own them. David. Oh, and by the way, all those services are still running. They're just being quiet about it. Okay, so I'm reading other questions here. Okay, so what happens now, Bar, is we're limit down across the indexes, and I think oil and gold are probably still trading. Yeah, there they are. So we can maybe play around with them a little bit. Let's watch and see how they're doing. And you know what? Hang on a second. So when this happens, this is what I do. I just scoot this over here, and then we'll just switch it to what looks like it's more fun. Looks like right now gold is more fun than oil. So we'll watch that for a little while. Oh yeah, gold's a lot of fun. Okay. So we'll let this populate for a minute, and then maybe we'll play in the gold arena. Oops. Okay. Now there was a question here I wanted to answer. Where did it go? Oh, so the question about the market hours. So here's what's going to happen. We're limit down now, and we can go up, but we won't. I mean, any kind of up that we do is people are going to push it right back. So that's there's guys trying to get filled further up. And then what happens is as soon as we open RTH, the limits change. And there's 3 different limits throughout the day. It goes up as high as 20%, but it goes up in increments, and it's based on the SP, the cash. It's not based on the futures. So in the morning, I'll try to get those numbers and post them. There's usually a few people on Twitter and on the financial sites that put them up once we know what they are. Okay, so let me see other questions. Scrolling down. Hope that made sense, Bar. Oh yeah, Raj, the lack of pollution. Isn't it fascinating? It's like we're all there's 7 billion of us, and we're wrecking the planet with climate change and all the other stupid human behavior. And the Earth is like, here, hold my beer. I'll throw a virus at you. The nature, one of the lines I love from the Jurassic Park movies is the one that the goofy scientist says that nature always finds a way. And that comes from chaos theory, and it's 100% correct. The Jeff Goldblum character. The Earth will be fine. It'll probably get rid of the stupid humans along the way, but it'll be fine. You know, that's every 100 years, there's a big pandemic like this. You know, Spanish flu was almost exactly 100 years ago. Maybe it's just culling the herd. Who knows? Okay, so Martin. Yeah, okay, so you are good, good. Okay, Martin, thank you for doing that, and I agree. I just wanted to make sure you weren't thinking, well, wait a minute, that's too high. You know, sometimes people do that math that way, and I'm like, what's wrong with you? You know, or they'll think like the other people and they'll say, well, wait a minute, you know, if I go to Trade Evade or TS Trader, I can do it for $2 a round trip instead of $4. But that platform is a total piece of garbage and you can't scalp on it. But, you know, so in order to try to save $2, they end up with trades that are horrible. So, you know, that works both ways. You've got to have a good platform and then, you know, negotiate the best rates you can get, and commissions are negotiable the bigger you get as a trader. And then, you know, once you do that, you know, it's a cost of doing business. That's all. Thank you, Martin. Yes, David. And you can ping me privately if you'd like some good news sources. I read them all. I read Al Jazeera and I read all the papers in the UK because they're really good at playing one side or the other with lots of bullshit. If I ever want to find out, you know, what the really, really silly point of view is, I know where to go in the United States. It's mind-boggling here, you know, the kind of crap you can peddle. You know, about the Q people and all that. I mean, it's just stunning. Dunning-Kruger effect, people. You know, and I'm not expressing a right or left view there. There's some crazies on both sides, but my gosh, never seen anything like this. Just the level of people that just refuse to check facts, you know. The Fox News example is simple. You know, they just downplayed this virus for weeks. Just, you know, the Trump, you know, party line. Oh, you know, don't let them know how bad it really is. Well, that's why we're where we're at, you know. And again, that all presidents make that kind of error. But the problem is this one, that's the only trick he knows, is pushing back hard. And that just won't work. You can't, you know, there's no way to lower interest rates to kill viruses. It's just not going to happen. So anyway, enough about that. Yeah, Trade Evade. I could go over that over and over and over again, and people will ask me once a week on the Top Step group and even here. Trade Evade, which is also TS Trader, it's privately branded, is not ready for prime time. There is no strategy you can execute on that platform safely. None. Doesn't matter if you're not a scalper. The database they use doesn't work. In 18 months last year and half of the year before, I was able to break it almost daily, and they think that's okay. So you got to understand, I worked very closely with the people at Trade Evade with what's wrong with it. It is not a platform you should go anywhere near. So yeah, we need to emphasize that over and over again. Again, it's nothing against the people doing it. You know, they have a structural flaw that they just won't address, and until they do, that platform will have trouble. And by the way, you know, from a coding point of view, that the kind of structural trouble they're having is a problem with the cloud in general. So, you know, it's not an easy problem to solve for trading. Cloud solutions to trading don't generally work yet. So, you know, if you're thinking, well, I have to be able to trade from my phone because I'm at work or whatever, you're thinking backwards. It's not that you need to use Trade Evade for that. It's that you can't trade from work unless you can get a real computer plugged into a real internet connection that's direct, you know, and not in the cloud like that. And that's just all I can say. So anyway, look at the LRCs on gold right now. They're telling a very interesting story. The top of the range is 1500, which is right here. And just for fun, let's throw a sell order up there to market. And then the bottom of the range, gosh, it's down further. I can't even see it without, looks like it's around, what, 1492. So where's that? So that's below here. So, you know, you could kind of, 94 might be interesting. So what I'm doing here is just demonstrating kind of what I was talking about. And with gold, this can be very tricky at night. It can move very suddenly and quickly, particularly if a large trader decides to buy or sell. But this is the idea of kind of, you know, working this range as long as this range holds. And right now, this is actually a fairly stable range. And let me explain why. It's a fairly stable range because we were in one up here since we opened. We broke out of it. We've established another one. And even within that one, so within this boundary from there to here, we are making a very little range and we're not very aggressively going one direction or the other. You know, you can see the delta down here is flat. So basically the story that's telling you right now is that everybody agrees on this range. So given that, you know, I could probably sell up here and buy down here, or combinations along the way, and make that work. But do I know which one it's going to get to first? No. And, you know, all I can do is watch the action and kind of play along. So, you know, maybe sell, whoops, didn't want that one there. Maybe sell one there because there's a big guy on the other side, you know, maybe. So this is a way you could kind of scale in or out of a ranging position around a core price. That's kind of how you do that. I'm going to show more examples of that when I'm going to do a boot camp and some more sessions on setups, but I'm first going to just for everybody publish the setup playbook, which will explain this in kind of a little bit more basic terms. But you can see it's coming down to me right now. So, you know, I might kind of, what's another spot? 94. Okay, I've got an order at 95.1. Where's that? It's like right here. That's a good spot. That's that low. So that's where this order is. This is a really good chart to dome example. See what I'm doing? I'm looking at a chart and I'm trying to figure out if my orders are at good spots based on what I'm seeing. And the answer is, yeah, they're kind of at really good spots. Why? Well, you know, that's a recent low. So I'm going to buy a recent low and maybe try to scalp it. And then this is a lower low, you know, and so we could even go down like to there. And, you know, if it starts coming down too aggressively, I could always cancel it. Yada, yada, yada. 14.99 is another one. I'm already at that spot. See, now look at this right here. See that big wick? And there's another wick and another wick. So this level right here got sold pretty well. So what's that? 99, that's that one. Middle of it is what? 97. Okay, so, and all right, here's a good example of how that spot that I was just kind of looking at correlates with a little high volume node. So that's kind of a good spot. Oh, good, we got a, what did we get here? We got a long. All right, so let's see if we can scalp out of it for a tick. Oh, we did. I could have gotten 4 there. Oh my God, I was about to move that target up when it did that. I just didn't get there fast enough. But that's a good example of how you can do that. So we just made, you know, a tick. We could have made a few more. We don't care. No shoulda, coulda, woulda. But I think we might get another fill here anyway. Cool. All right. So let's this time put our target there. So now we're going for 4 ticks, and we'll try to add to it on this little high volume node down here. But you can see right now we're long 1, and I've got a sell order there. I'm second in line of 2. So that's not totally encouraging. People aren't jumping to get there. All right, so now we got a 2 lot on. So let's put the first one a little closer. And this one's in a spot I don't want to be. It's right on the low. And gold likes to break through the low. So let's go below it a little bit. And again, I'm not moving stops. I'm just getting them out of the way, because for this particular setup, I'm not going to let it get down there, but I don't want them to confuse me. I'm looking to add to this down here, either here or maybe right there. Oh, look, see how choppy it is? That's a kind of a reaffirmation that I'm thinking correctly. You know, if I get a nibble there, I should be in good shape to catch my scalp. But, you know, you can stick it anywhere you want. You know, you can add any number you want. I've got 2 here, which isn't a great deal of risk. But the point, look at this, you know, if you're using all right, so there we just got out of that profitably on the first one and the second one. And what I was about to explain was it was almost $200 upside down. But again, I wasn't worried because I'm reading the action. I'm not reading my P&L. And so that was a really good example of trading around a little core position and just reading this range. So as far as chart to dome, and just using a different instrument, you know, there's gold right there. And somebody asked me if I could please show, you know, what the actual trades look like from this, you know, fine, yada, yada, yada. Let's go get them. Let me make sure we're actually tracking that account. So it's going to take me a minute. I think we are. No, we're not. So hang on. I've got a bunch of different accounts that I use for various purposes. We're okay. We need to unignore that one, and then we can go back here. And okay, don't need that anymore. Hang on, guys. Bear with me a second. Okay. All right. So there's those gold trades right there. So 10 and $50, right? All right. So again, don't worry about the P&L. You know, if you're executing profitably, just let it add up on its own. But that's a really good example of how it can do that, you know, without taking a lot of risk. Now, see the action we have now? It's changed a little bit. It's coming down toward the lower boundaries a little more aggressively. So I'm going to kind of assume that it's going to blow through the low because it likes to do that. And maybe I can catch a low here, you know, a long rather, or maybe another one even further down. And that other level, where was that again? Let's look. It's like 92-ish. So it's kind of where we are. What would be a really big overshoot of that? I don't know, 90. So maybe another one down there. You can see a couple little orders in here, but another way to look at that will be to go out to the equivolume chart that I run over here in TOS. And again, as I mentioned, I don't really use this for trading, but sometimes I use it just for intermarket. And we don't have enough data for this to be of any value. So anyway. All right, let's see. I'm going to leave that up there for a minute. I'm going to go back to questions. Yeah, Amy, that's highly likely. We'll probably get to that 7% from the 5% instantly, I would think, just judging by the action we're seeing right now. Ooh, now I like this short. Damn it, I missed it. Okay. So now we're short, and I just flipped this setup around. It was going up in a weak way. So let's see if we can scalp out of that. And it's purely based on this tape that I'm watching here. So, and again, you know, I'm watching these ranges. If we get above 97, then, you know, or maybe 99, then I'm really wrong. But remember, I was looking to sell up there anyway. So, so that would be, boom. Okay, that one just filled, and that one just filled. Ah! Okay, let's get it, and then we'll see. So again, for those of you watching at home, we're now up $60. So we got another 10 bucks on that one. So anyway, those will add up. You could do that all night. And, you know, it's relatively predictable. And with this kind of size, you know, if you look at the bids and the asks here, I wouldn't try to trade this with more than one or two, or even that could be a little risky if you weren't good at it. But certainly in oil here, there's enough room to trade a little higher, a little more size than that if you wanted to. Although overnight, I generally size down. Okay, let's see. More questions. Martin, yes, good. Thank you. Thank you. Okay. Yes, Amy. Trade of 8, we talked about that. David, off topic, but Boeing is at $95. Yeah, you know what? Boeing is an interesting scenario. They could get a bailout, which, you know, kind of takes all the technical analysis off the table. That's why I don't play stocks. I really, you know, I know you have a relationship with them. You work with them. By the way, remember what I said about gold blowing through the low? It's just about to do it. It does that fairly frequently. Just because the retail guys get stopped out. That's what happens. I think we'll probably see that here, but maybe not. So I'm talking about 93.3. I expect it to just fly through there. You know, maybe we can buy it down here just for fun. And you know what? Let's make that. So instead of an HMOMO, I'm going to make that a 4-tick target. And so if I get filled down here at 92.8, I'm going to just try to grab 4 ticks. So what I did was I just changed that little automated trade management there. So because that might pop so fast that I don't have time to move the target. So this way it will take it. And the stop on that particular setup, my 4-tick stop, my NQ 4-tick is 20 ticks. I don't think this will get that far away from me. So that's a good setup there. I'll explain more about that when I talk about trade management and drills and stuff a little further down. See what I'm saying? We're going to go right through that low. There we go. Boom. We just took it out. This happens all the time in gold. You know, people think, oh, that's the low of the day, I'm going to buy it. And then some algorithm says, hold my beer. This happens all the time, every friggin' night. And the retail guys always fall for this. You'll see all these one lots going off, buying the low, you know, thinking they're going to scalp it. And, you know, they'll get stopped out and we'll drop 10 ticks and then we'll pop back up. That's typically what happens. And there it goes. Okay, so look at that. Let's jump in that. Hold on. It's getting really crazy here. We need to switch to HMOMO. Okay. All right, so now we've got 4 long here, and let's see, we'll take 3 of them off right away. And let's get these other stops out of the way and let's add to that position. Okay. Okay. And this might look like really crazy to you, but if you watch it on the replay, it will make sense. I'm profitable right here. And trust me, I will get out of this trade profitably. And I'm going to take the first, well, I already took off the first. I took them all off profitably. Oh, well. Anyway, you know, those kinds of events, that's exactly what I was talking about. You know, they'll fly through, they'll take out all the one lot stops, and that's just a really good opportunity to buy, but you might have to do it aggressively with multiple contracts because doing it with a one lot's just not going to work. You know, you'll get swept out of a one lot like I did on the first entry right away. So, you know, don't try this at home until you're familiar with how that works, and particularly at night. It does what I just demonstrated, that overshoot. It will do that almost every night. Sunday night's very common. All right, let's see. Textron. Oh, that's who you work for. Okay, yeah. Okay. Anyway, but this is still a long, by the way, here, guys. Let's throw another one in there and see if we can make another $100 or so and maybe add to it down here and get the stop out of the way. And oh gosh, this is a really nice little setup here. So, okay, so now we got 2. Let's see if we can get 3. So we're 2 at 90. Now we're 3 with an average of 89. And we'll get the first one off right there. And let's watch this for a minute. Watch the tape. Make sure it doesn't fall. It could fall a lot more here, so I'm not going to add to it quite yet. And again, I've practiced this trade a lot. If you can't do 10 lots in gold, don't try this, because with just a couple lots, it could go badly against you. So I'm going to put all my stops down here just to demonstrate something. So they're just, that's not my real stop. I'm just getting them out of the way. But look at this. Like right now, I'm upside down like $700, $400, you know, and again, in a 10 lot trade, that's nothing. But, you know, if you're just going in and you can only afford a 1 lot or a 2 lot, you know, you're already stopped out. So, you know, it's really important. It's also to kind of have an idea where, you know, I would bail too here. And that's, let me show you how I do that. Hang on, I'm already logged into that. Just hit that by mistake. Let's switch this out and let's see. So this is gold. Let me just bring gold up all the way so we can kind of get, you know what? Let's do it with a real platform. Oh, guess what? We're about to get profitable on those 3. All right. I don't have any of my other charts running for gold yet because I've got Zoom running and I turn them off when I do, so it runs smoother. But let me switch this to gold. So give me a second to do that. Oh, look at that. We're profitable. Oh, and now we're not. Ooh, somebody wants to sell right there. This frequently happens when I have an overnight trade in gold. Turns out that the spot that I'm long at is the spot that a bunch of people are selling. And when I see that, see, now we're back there again. So that's the God's way of telling me that I should buy it if it pulls really far away from there. So I don't want to add to it here, but I'm about to fill on my first couple here. So let's take those off if we get there. So, you know, you can see that there's people selling right around my entry, but there's also people buying just below it. So I'm still fairly comfortable with the order flow. And it looks like I'm about to fill on the first 2 contracts here. It won't take much of a move up to do that. Hang on, let's get that out of the way. So, you know, you can see on this range, I only need a couple. All right, there's the first one. And there's the second one. Okay, so now we can get the stop underneath it and just push the target way up there. So now we can afford to let this run, right? We're profitable. We entered at 88.5. The current trade is 89.8. So, you know, we can ride this as long as we want. So this is why if you're a good scalper, you'll get really, really good swing trade entries like I have right now, where I'm about to make what, 88.5 to 90.5 would be 2 whole points. But, you know, I could back that stop off a little bit if I want to give it a little more room. I don't like to do that. I rather just let it take me out just like that. So, you know, that turned out to be a really profitable. And again, look at what happened right here, guys. Look at that. Remember what I said in the first 2 sessions, whenever the 2 LRCs intersect and we bounce off of that area, that's that's the God of statistics telling you that, okay, the bigger range, which is 96%, and the smaller range, which is 96% of 96%, agree that you should buy 86. That's what they're telling you. Just on the pure odds. The odds are overwhelming. They're like, less than 1% that it's going to go below that. That doesn't mean it won't. It could, in which case get out. But the odds of a winning trade here are just really high. And so that's why you saw me aggressively scale into that. I'm wrong all the time. But the reason that I don't care when I'm wrong is because the odds make me profitably right more often than I'm unprofitably wrong. And it's just as simple as that. But it's not that easy. I don't want to mislead you into thinking, oh, this is, I'll just watch Jeff do this a few times and I'll be able to do it. It's not that simple. And again, I said I wanted to show you some context. Let's look at the context for gold here. And maybe that'll give us an idea why this trade's working. I haven't really looked at it. Oh, all right. Well, of course. So this is why they're trying to push that low. It's the low from Friday of the first hour. That makes some sense. Looks like it was, yep. It was like, that was the first hour low. And then it blew through that. And the rest of that session built a high volume node below it. And so this big punch up that we got right at the open tonight got sold right away because everyone's like, oh, are you kidding? Low risk short. And so what happened now is, the low risk short game is over. And now it's the, is there a long here game? That's what's going on. So that's how I'd read the context of that trade. Any questions about that? Lombrick says, it seems like you need a lot of experience to manage a trade like that. Absolutely, you need a lot of seat time. Once you learn to read the DOM and the price action, I'd say at least 18 months of, every day for a couple hours at least. But what you're seeing are professional level skills, right? You're not seeing, of course, a doctor, it'd take you 12 years to learn how to do surgery as a rookie. Yeah, I agree with Amy. I wouldn't play any stocks in this market, literally. I don't trade stocks. I haven't traded stocks for years. There's just no reason. The risk is too high because of overnight. Yeah, trade the futures and keep the rest of the cash on the sidelines for when the market actually bottoms, because then there will be some really good stock opportunities. But that's so far from now. I mean, that could be 2 years, 3 years from now, easily. Look at the statistics I posted on Twitter about that. If you look at my surfing, which is me on Twitter, and I retweeted some statistics from a friend of mine. Oh, where are they? Down here, right here, about how long these take to recover. So these 2 tweets on March 17th, check those out, and you'll realize why trying to find, to buy bottoms is just crazy. In stocks, I mean. There's just no reason to even think about it. Okay, so let's see. I'm reading questions. Okay, well, I see the conversation between Amy and David here, but I don't see any other questions. So it must just be that everybody is watching me and saying, oh, okay, that's easy. I'm going to go do that now. So cool. All right, we're all good. Oh, so what would I be doing right now in gold? I'd be playing long in gold. Obviously, this is not a short anymore. The shorts are going to get caught here. And other than that, I probably wouldn't be doing much. Oil, I don't have a real good sense of what's going on watching oil. It looks pretty random. Let me see if I can glean any more context from oil. Nah. Here's the problem with oil right now. There's so many people that are liquidating oil structurally because they can't afford to hold it at this price. And you can't afford to get it out of the ground at this price. So, if you think oil can't go any lower, you're dreaming. We could see oil at $5. I've seen oil futures go negative, guys. In other words, the forward price of oil was negative. I've seen that. So don't assume that it can't go below zero. And don't assume that, well, what have I got to lose if I buy it at $10? And the answer is $10. And the futures make a lot of leverage to that, so it's actually a lot more than $10. So don't fall into that trap of thinking that you're smarter than all the other people on the planet with respect to risk. You're not, and those trades just aren't good ideas yet. Hang on, I've got windows that are reloading, so they're not cooperating with me. Give me a second here. Okay, start posting more questions if you have them, or just any comments or anything about this session, because if we don't get a few more questions, we're going to wrap up because we've already been going a while here. And let's see, I did something to my, somehow I messed up my, there it is. Okay. I need to restart Jigsaw because every now and then that happens if you move something and I don't want to save it. I'm just going to get out of it. So give me a second to do that too. And we can minimize that. We can delete that and we can restart Jigsaw. Okay, David, the reason that it can go negative is because it's based on the future. So, oh shit, that didn't fix it. I posted a couple of terms, backwardation and contango in the futures markets. Take a look at that. It's because the futures are based on forward selling and buying. They're not based on anything that has to do with logic. And I know that answer sounds crazy, but it's correct. Okay. Oh, I know why this isn't working, because there's no data. Duh. All right, so I just need to match it to that. So bear with me 1 second while I repair my Jigsaw layout. Okay, that should do it. All right. 1 more second. Just need to save that. And we're good. I always make backups of all my different types of setups. So whenever I do something like this, I just will add a number. So you guys might see, version 8, version 9. I do that whenever I change it, or just whenever I'm saving it again. That way I just have like a dozen backups. Okay, back to questions. Okay, Lambert, my current setup seems to be different in the first couple of sessions. That was 6 months ago. There's always differences for the changes. Look at the comments I make over and over again about that you always evolve, and it's progress, not perfection. And I have one that's just indexes, and I have different ones for the indexes. Depends on the market conditions. That's the answer, Lambert, about the different setups. And the ones in the 2019 workshop, those charts were on Ninja 7, so they don't look anything like this. I migrated to Ninja 8 in December. And that I actually discussed that in the latter workshop video. So if you're only in the early ones, you wouldn't see that yet. You got to watch them all in order, and then watch all the ones we've done since we started TRG in order. I strongly recommend that for everyone new. That you'll learn so much doing that. Yeah, what Maria's saying is absolutely correct. I was on Ninja 7. Okay, let's see. Darren asks me, is there a type of personality that's better suited for the dome trading? You know what? No, I don't think so. I've seen people that are really deliberate and slow thinkers and nothing at all like me do really well with it. A good example of that is Lee. Lee and I couldn't be more different in terms of our personalities, but we have the same approach to the markets. He doesn't scalp like I do. He does work on bots to do that, but really, his approach is a lot more like what you guys would think of as, intraday swing trading. So absolutely, I think anybody can do it. It's just a question of understanding yourself. So, Good, Joseph. Family time is critical. Go do it. You need your family support to do this well.
Yes, that's a good place to look at David. Are there any commodities that I think might be good to trade? That's a great question. A few people have asked me that. I've been trading the crack, Amy, which is a great trade, but it just requires a ton of expertise. The crack spread is what I've been trading. That's the difference between crude oil and refined gasoline. Absolutely. It is literally called trading the crack. I kid you not. Look it up on the NYMEX. I posted about it in the Top Step group and also in the um, surfing group. But if you just Google NYMEX crack spread, and I kid you not, there actually is. And you could, and traders trade the crack, and people will say, "Oh, I'm in the crack with a stinker." I mean, there's all it writes itself, right? But my favorite trade is the crude crack, which is gasoline versus crude. But there's a bunch of different derivatives. You know, you can trade, you know, jet fuel versus diesel or jet fuel versus gasoline. You know, and so when the markets are really crazy, it's a great trade because there's so much uncertainty in gasoline, and there's so much uncertainty in crude oil. And the difference between gasoline and crude oil is the refining cost. And the refineries don't know what they're doing either. So for a speculator, it's like a speculator's, you know, wet dream. But it requires a ridiculous amount of experience to trade. As far as other stuff, no, you know, food, soybean, corn, you know, just watch the movie Trading Places. You know, you just never can know enough to be right. You know, the only thing that you can do there is momentum trades. You know, HMOMO works great in any commodity, but, you know, make sure you understand the instrument. You know, some of them go lock limit all the time. Some of them might only trade, you know, 3 contracts in a whole day. Or, you know, it might be 3 trades. You look at the volume and you'll say, oh, wow, you know, that wheat sure trades millions. It's really liquid. You know, then you'll go do it and you'll realize that's 2 trades all day and it's really not, you know. So I strongly encourage you to look at the instrument and, you know, draw your own conclusions. One of the things that I learned a long time ago, and this is why I answered the bonds question the way I did early on at the beginning of this session, is that, you know, I know what I know. And, you know, I am not a victim of Dunning-Kruger effect, you know, too stupid to know what I don't know. I know exactly what I don't know. And that's, as far as I'm concerned, the best measurement of intelligence there is. I don't care what your IQ is, it's understanding what you don't know that's important, you know, to be a good decision-making, thinking in bets player. So I know what I don't know, and I don't know a lot about all those markets. When I trade them, I figure out what I need to know to execute the edge I have, and that's all. So, you know, I hope that makes sense. Yes, it is, and you know, there's so much going on in the world right now that is a victim of this Dunning-Kruger effect. If you don't know what that term means, I'm googling it for you right now. It quite honestly means that most people are too stupid to understand what they don't know. They're too stupid to realize how stupid they are. That literally is what it means. And just the Fox News response to the virus is a really good example. I mean, you know, this isn't a political conversation. You know, the facts are the facts. And so you see this over and over again. You see it in trading with the Furus, you know, the people that just insist that, you know, I have a guy arguing with me on Top Step right now that order flow isn't usable because the points of control don't matter. And I'm like, you know, again, a little knowledge is really dangerous because I'm a professional order flow trader and the point of control is meaningless, as I say over and over again. It's not a metric that any order flow trader uses. It's the one that the Furu bullshit artists use. So, you know, just by virtue of making that statement, this guy on the Top Step group is identifying himself as a Dunning-Kruger person. He's making a statement of fact, proving that he has no fucking idea what he's talking about. So that's an example of what I mean. So learn what you don't know, guys. You know, you're all smart people. You all have a lot of background. You've all done lots of trading classes. The key isn't what you know, so forget everything you know. Learn what you don't know. That's where the opportunities are. I hope you can embrace that. I really do. Okay, am I cutting out? Apparently that's just you. Amy, that's what you get for being in West Virginia. Got to go out and
I was going to pick on you, but I won't. You're in Florida. That's right. You're from West Virginia, aren't you? Is that what? Parts of Florida are West Virginia. You got to agree with me on that, right? Now, I've actually had dinner with Amy and her husband, and I know her to be a very bright lady, so she knows I'm teasing her. But it's mind-boggling to me that people are being interviewed in West Virginia and Alabama and Louisiana, and they're going on spring break, and that coronavirus, that's just a liberal hoax. What's wrong with these people? They're getting all their news from one source, and that source is lying to them, and it's criminal, but that's what's going on, guys. You do your own homework. This thing's going to kill a lot of people, and it's going to cause a lot of disruption. It's not the flu, for fuck's sake. Okay. I'm sorry if I'm using profanity and your kids are in the room, Maria. I will stop doing that. I know that sometimes I do it for emphasis, and I don't do it that frequently. So I will keep that in mind. I apologize. Lee's going to get like a beeper button to beat me when I do it. You know what? There's something wrong with every generation, David. Your generation has its issues, the millennials and the ones since the millennials. But, I'm a boomer. I'm the very end of the boomers, and we're pretty screwed up too. But I'm fortunate in the sense that I'm one of the poor boomers. I was born in 1960, and the boomers that are about 10 or 15 years ahead of me have really, or had until, a month ago, really nice retirement accounts and whatnot, most of them. And the ones that are closer to my age are the ones that are still having to work and have no retirement accounts and all that. And so, it's really interesting talking to a lot of my friends because, remember, I've told you guys this before. I grew up in Palos Verdes, with a bunch of trust fund babies, and I'm not a trust fund baby. I make that very clear. My father grew up in the Depression, and, oh, you want to have lunch at school? You better get a job on the way to school. I mean, literally. So, but where I went to high school, kids got, Porsche 911s for their 16th birthday. So, I'm fortunate that I grew up in both kind of, cultures, and because of sports, I spent a lot of time in South Central Los Angeles, and that's why I love hip hop. And, so again, I'm not saying this all because, my life story is so great. I'm just saying that, as soon as you get away from your friggin' biases and get out of your own goddamn neighborhood and go meet the people who are different than you, that's when you will start to understand what the world is all about. Some of the best conversations I've had in my life were in Lebanon, having coffee with 2 Jews and 2 Muslims and discussing Gaza. One of the best conversations I've ever had in my life was that one right there. And, in any other moment, those 4 people would have been looking to kill each other, literally. So, when I experience something like that, and then I come back and I see people, fighting over toilet paper, I'm like, really? So that's Dunning-Kruger. Don't be one of those. And the only way you can not be like that is to know what you don't know. So that's why that is in fact wisdom. But it's true of all generations, David. Okay. You know what? They're not smoking weed, playing Xbox with no job. I smoke weed all day while I'm trading. And if I don't do it, I'm in too much pain to trade. And many of you know that. I've said it throughout the workshop. I grow cannabis and use CBD and THC exclusively. I mean, as I'm talking to you right now, I am consuming THC and CBD. So if you're, of the misinformed view that products like that only make you stoned and not capable of doing something, you're wrong. But again, it's about knowing yourself and knowing what you need. Certain kinds of cannabis help me focus. I trade better if I use them, and other kinds like CBDs help me control pain so I can focus more. Then there's, indicas that help me sleep, the 3 or 4 hours in a burst that I do. And, that all works really well. And this is coming from a guy that took the medical community's advice and lived on opiates for 30 years. And I won't touch them now, and I haven't in 20 years. So again, I know it does. So anyway, David, that's a point to what you said. And Amy, I know it's so funny, coffee with 2 Jews and 2 Muslims. I'll tell you just a little bit more. I got to, because some of you know my background. My family's Jewish, although I don't practice any religion. if anything, it's closer to Buddhism and Taoism, which is my intellectual belief. But you know, obviously I have lots of friends that are Jewish and whatnot, and I know lots of people that are Muslim, and I've traveled a lot all over the world. I've said that before too, and you know, and I love it. That's what I did in my whole 20s. I took the money I got from a startup in the early 20s, and my girlfriend and I went on the road for 7 years, and we just went everywhere, and we lived wherever we felt like, and it was a blast, living out of backpacks. Anyway, so that's when that occurred, and it was actually hosted by a Turkish guy who was Muslim, but his partner in the coffee shop was Jewish. So they started doing this almost as a joke, you know, coffee with, and it was actually more crass. It was, I forget what, coffee with two Hebes or something was how they used to promote it. And they would literally get, you know, Hamas type guys coming in, and, you know, and it was a really interesting experience among many really interesting experiences, but that one certainly was up there. Okay, yeah, Puerto Rico. Huh. Another place, you know, that's an American territory, and we're just ignoring it. It's criminal. It's absolutely criminal. What's, you know, all the destruction, and you know, we're just literally ignoring it because there's a bigger news story. So anyway, you know, I'd love to ask you guys, now that we're all just having fun here. I know I've got a couple of other younger folks that have identified to me since I mentioned that David is 20. I know, let's see, is he here? Okay, he is not here. So I was going to mention somebody else, but I don't see him. We have another 22-year-old. Yeah, I think he was too. But anyway, I'll let him introduce himself. I don't know if he wants his age to be widely known, but I know we have a couple of other 60 and 70-year-olds here. This is really, really cool. And, you know, if you don't respect hip hop, even as a musical, you know, even if you don't like hip hop music, check out on Netflix. Is it on Netflix or is it on Amazon? It's called Hip Hop Evolution. I think it's on Netflix. And let's see. Yeah, this show right here. Check this show out. It's there's 4 seasons of it, and it's just so interesting. I mean, even if you don't like the style of music, it's fascinating how the cultures developed. You know, one in New York and one on the West Coast, and different ones in New Orleans, and different one in Florida, and it's just totally fascinating. So, anyway. You know, it's funny. I was having this conversation with Lee about hip hop, and we were talking about Grandmaster Flash, which is the original hip hop song. And you know, even if again, if you're not a fan, and I'll get off this topic right after this, but I play this video a lot on my Facebook page and whatnot. But this is like the original hip hop song, and there's no profanity, and it's just about life. And I know you guys can't hear it, but check this out sometime. You know, Grandmaster Flash and the Furious Five. I mean, it's you know, a white Jewish guy from a rich neighborhood, and I think this is just as good as it gets. So anyway, I'll leave that at that. What other questions do we have, or comments, or anything, or we can wrap this session up in a few minutes? I like a ton of different artists, like Eminem. I like Biggie. You know, I respect them all because I understand what they're doing, and you know, it may not be the music that appeals to me, but I understand, you know, the idea of the music and what they're trying to communicate. And heck, I even get, you know, the guys from Compton. And I remember I lived really close to there growing up, and I went there for track meets and motocross races. My best friend was one of the 3 black guys in Palos Verdes, and boy, did he have a hard time. You know, we would go to Morningside or Compton High School, and you know, we'd be jogging on the track, and you know, they would call him Uncle Tom right to his face as we jogged by at track meets. So you know, just imagine, you know, what other people's lives are like, and you'll learn a lot. Learn what you do not know. That's important. Okay, so anything. All right, we've done enough music stuff. Yeah, you know what? I could be a rapper. People have told me that. I should do you know, sometime I've been challenged to do this, to do a rap live tape reading. I'm not a good enough rhymer to do it, but one day I'll try it just for fun. It would be fun, wouldn't it? All right, what other questions do you guys have? I'm just, you know. There must be some good other trading questions. Oh, I see a new message here. Hold on. What's that one say? Can I comment on fast and slow fibers? Oh, yeah, yeah. You know what? You feel it on your head. Did you see the thing I bought for my neck bar? I posted this. This was back when we had the workshop. And I forget what the damn thing is called, but hang on. I'll show it to you right now. I bought this thing, and it rocks. I guess it's unavailable now, but this thing, you put it on your neck and it massages and gives you heat. And there's a few of these on Amazon, but this one I really like. Maybe there's a newer model of it. Maybe that's why. But anyway, that saves my neck. But because I literally have a broken neck. There's a fracture in my neck that has not been operated on yet, and it needs to. But anyway, having said that, it's very simple. You have two kinds of nerve fibers. You would love it, Amy. And it's like $40, and it's Amazon. You can send the damn thing back. You can even get a prescription for it, and your health insurance will pay for it. Okay, so the fast and slow fibers. What that means, Bar, is this. You have two types of nerve fibers, and your body is capable of transmitting on one or both of them at the same time, and they just work differently, different electrically, literally. And for people that have, I wasn't totally clear at the beginning. Everybody has both, okay? We all have fast and slow fibers, but people are either fast fiber dominant or slow fiber dominant. And people that are fast fiber dominant tend to have fast reactions and execute things very quickly, think quickly, talk quickly, be sprinters. People that have slow dominant fibers tend to be more comfortable with predictability. So, by the way, they also tend to be conservative. That proven studies genetically about that. Conservatism and progressivism have genetic roots in terms of risk management. So the only thing I know about it personally is when I was a sprinter in high school, and I was good, particularly for a little white guy, right? And I got a couple scholarships, and one of them was to the University of California, and I initially went to UC Santa Barbara, and they didn't have they had a great Division III team, but not a world-class team. And UCLA had a world-class team. So I got to UCLA, and I was basically cannon fodder down there for the four fastest guys in the world at the time, but they needed guys to work out with that they could use up. So I could do that. At least I did for a while before I ran for my fraternity. And one of the things I got to do was I went through their health screening. And one of the things that they did was this fiber screening that was sponsored by the Neuropsychiatric Institute at UCLA Medical Center, because it was something they really wanted to study. They wanted to understand, why was John Smith a world-class 200-meter runner? He was one of the guys with the black glove. He was at UCLA right before me. So there was Tommy Smith and John Smith and Maxie Parks. Okay, if you Google those names, those were the Olympic champions. And one of the things they found with those guys is that they all had really, really dominant fast fibers. So at first it was believed that maybe it's racial, maybe black guys, that's that. And so, perfect guy to test, the white Jewish guy, so they did. And it turned out, this was amazing. My fast muscle fibers were actually faster than two of those guys, that were world-class Olympians. The problem was, they were both 6'2" and really cut black guys. And, I was 5'10" and, cut Jewish guys. So just the physical advantage they had in terms of leverage with their fast fibers gave them extraordinarily, world-class performance. But interestingly, if you just put me and them next to each other, and, they would flash like a green light, and as soon as you saw the light, you had to press a button. I could do it as faster than them. And the people that had slow dominant fibers, you could see the difference. You could see their brains as they would think about it and then go to the button. And so another study that was done on Jeopardy contestants, the overwhelming Jeopardy champions are fast muscle fiber people, if no other reason that they can get to the button quicker. So, and that's true in Trading the Dome too. So, if there's any way you can get tested, it's worth doing just to understand yourself. But the simple test is turn on the hot water to an uncomfortable temperature, not one that will burn you, but, a sink, hot water, and then wait for it to get, you see steam coming out of it, and then shove your hand in it. Do you feel pressure or pain first? I feel pressure for a measurable amount of time. before I feel the heat pain. It feels like somebody's just pushing on my hand. And so that's cool. So Amy's asking me, if you're fast dominant, can you train yourself to slow down? Absolutely. You do that by meditating. And the way and it's true, even regardless of what type of fibers you have, everything that you need to train yourself to do, you will be better at if you do it by meditating, because meditation is a complicated, it's like absorption. It's one of those big fancy words so they can charge you for classes. And the bottom line, meditating is nothing more than just focusing on one thing. So if you've never meditated before, get a book on how to start, and start with transcendental meditation. It's the simplest one out there. Literally just pick something and stare at it. My coffee mug says Lake Arrowhead on it. I'll just look at it, the word lake, and nothing else. And you just focus on that and clear your mind of everything but that. And over time you get better at it. And I can stare at something and tune out for 45 minutes, and the stuff my brain does while I'm doing that, I can't tell you how good it is. It's phenomenal, but I have no idea how it works. It's like my brain's operating without me, literally. So that's what I would suggest if you want to learn to do that. Yeah, I hear you about the marriage thing. I get it. I'm fortunately not married, although I have been. But I do much, much better in serial monogamy, but I've just never found the need to marry again. I was married in my early 30s to a British lady. That's how I lived in London and traveled all over Europe while we were married. We were in business together in the television business. So that was one of the ways I got all that experience. I agree, Amy. Clear the mechanism. Yeah, you have a lot of great ideas, even though you're from West Virginia. So that just proves it's nurture, not nature. And I will tell everybody here, you are politically conservative. And as much as I wanted to not like you, I do anyway, despite that. So there you go. Although I still think you could learn some critical thinking skills about your leaders, but that's a different conversation. All right, do we have any other questions or comments? Anybody have a burning desire? HRV breathing recently helped you calming down. You want to define HRV for us real quick, Bar? That's not like high volume zone breathing, is it? I do something that is taught by the military. I'm also trained as a marksman, although I was not a military marksman. But one of the things that I teach people when I teach them to shoot is about controlling your breath and your heart rate. And I don't know if that's what you're talking about, but if you inhale for 6 to 7 seconds steadily and slowly, and then hold your breath for 4 to 5 seconds, and then exhale steadily for 4 to 5 seconds through your mouth. So inhale through your nose for up to 6 or 7 seconds, then hold it for 4 or 5, and then very slowly exhale. Just by definition, by biology, that slows your heart down. And I can get mine down like 20, 30 points doing that with some practice. So I don't know if that's what you're referring to. Oh, from Josh. Okay, yeah. Yeah, that's a very similar concept. I didn't recognize the term you were using. It's been a while since I read that book, but yeah, let me just Google it real quick. I think he was talking about almost exactly the same thing. The technique I was talking about is military, but many of the techniques I use are military. And what is that, HPV you said? HRV. Oh, resonant breathing. Yeah, that's exactly the same thing. Mm-hmm. See? So yeah, it's just the idea of counting the way that I described is taught to snipers and to special forces soldiers, when you're under really, really scary circumstances. And I find I can slow my natural heart rate's kind of high, and I can really pull it down. William Hoff, that sounds familiar, but I can't place it. Oh, I am looking at your muscle fiber link. There you go. So there's an article on it. I don't know which way it tells you to test, but bench pressing. All right, whatever. I like testing it with hot water. It works for me. There's Biggie. William Hoff. I'm still not sure who that is. Hold on. Oh, that guy. Yeah, yeah, yeah. The freezing. Yeah, 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 yeah. Yep. I have heard of him and I think that's really cool. I think anybody that does stuff like that, I just think that's the coolest stuff you can do in life is to be somebody like that that does something just totally different. Have you guys, are you guys familiar with the guy who lives um, the sustainable or the sustenance lifestyle in Alaska? Do you guys know him? He was on the National Geographic special and now he's got um, a Facebook page and whatnot. I'm blocking on his name. Oh, hang on one second. Actually, I follow him. I should be able to find him on Facebook. Give me a second. Oh, what is his name? Oh, hang on one second. Now that's going to bother me. This is a problem with being 60. Oh, I'm trying to think of good clues here. Life Below Zero. That's the show. And it's not Eric. Here we go. And the guy I am looking for, Glenn. That's Glenn Villeneuve, this guy. He's the guy I'm thinking. This guy lives in a cabin in the middle of Alaska, and now he's married. But the first couple of seasons, he was like literally just, this guy. Check this out. I mean, if you're not familiar with what this guy's story is, but it's like your ice guy. It's just, I have so much respect for that. Anyway, okay, so any other questions or comments or burning desires or interesting stories or anything? I don't see any. So the 6E, what's going on with it, David? Don't just say check it out. Say what's happening with it. I mean, I don't even know if I don't even think that's a symbol that I have available because I don't trade it. So let's see. No, it's not one of the ones I've got downloaded. So, all right. Well, anyway, I'll let you guys go look at it yourselves. Oh, I'm not saying I don't have the data for it. I'm just saying one of the tricks um, to optimizing Ninja and your trading platforms is to not even have symbols downloaded that you don't trade, David. So if you're not actively trading it, that's one way to totally optimize your system. The only symbols I have in my system are these, no others, because I don't trade any others. So I don't care. Sure, I'll see what they're doing on Twitter or whatever. But, I don't have a chart running and I can't pull one up quickly because I don't want to be able to do that. Yeah, sure, I could always go grab this and we could detach it and we could say, okay, we need a symbol for what's going on in the sixes. Which one were you looking at? You were looking at the E's. Okay, that's the euros. And then we could blow this up, yada, again, it's like, but I'm not going to trade it anyway. So you get my point. I find that distracting having simple symbols that I'm not really trading. It's fun to watch them and whatnot, but focus on the ones that you make your money with. I think that's good advice. Yeah, TradingView is good for stuff like that. I wouldn't recommend trading with them, but for that kind of stuff, they're good. Yeah. It's hard enough when you're new to just learn one good symbol or two good symbols. It wouldn't be a bad way to practice, David, if it's something that you've done before and it's an instrument you're learning. It's perfect. But if it's not going to be one of your top 2 or 3 instruments going forward, then you'd be better off getting some sleep. Seriously. I honestly believe that. Every instrument's different. So the experience you get, watching 6E is not necessarily going to help you with ES. They're different animals, If you were riding a tiger and an elephant, they might be able to get through the jungle at the same speed, roughly 50, 60 kilometers, but it would be a completely different ride, wouldn't it? So, I prefer to ride elephants, but I like to watch the tigers because they're so nimble. All right, fair enough. Any other questions going once, comments, burning desires? We're gonna wrap this puppy up. It's been what? We started 2, it's been 2.5 hours, my God. How do I do it? All right, we have an early session tomorrow. I purposely did this for all of you. So if nobody shows up, I'm gonna be really pissed. Tomorrow morning at 4:30 Pacific time, we are going to do live tape reading, assuming we have some, and I think we will. We'll certainly have oil and gold, and then we will, as soon as we get open, we will have the others. Now, what's going to happen? I'm going to do the drill and tape reading discussion beforehand, and then we're going to end that session before 5:30, and then we will start the normal Ides of Monday 5:30 session for everybody. So that's how it's going to work. So please be there tomorrow if you want to do the live tape read. And worst case scenario is we'll do it with gold and oil, and we'll talk about drills. And I'll give you a dozen different drills I know of and how I use them, and I will take contributions from Amy and anybody else who would like to share what they do and how they do them. Because drills are very personal, and that's going to be the key point. Okay, thank you, Mike, for your attention and for showing up on a Sunday, and everybody else as well. Alex, thank you for playing. You were a good sport with me pointing out your questions, and everyone else as well. I will see you guys in the morning. Have a good one.